Some sort of investment, potentially even a takeover bid. We are going to see how that shakes out in today's trade. Remember, Nokia still assessing the deal flow, no real comments, but could have an effect in today's initial trade. And lastly, ThyssenKrupp losing their CEO. We'll see how that shakes out. Maybe not really welcome news given such a surprise for the company. Guy.
So some potential action at the single stock level, index level maybe less so. Let's take a look. It is time for the Friday opening trade. Here we go. This is what we're looking at. We are post NVIDIA. We are waiting for the US holiday. We're waiting for payrolls also next week out of the United States. We've got a bit of inflation data we need to digest today, but it does seem as if we are starting off, as we seem to have done for the bulk of this week, on a fairly quiet footing. London expected to gain a little bit of traction, maybe advancing a little bit more than maybe some of its peer group. You are seeing interesting things happening in the commodity market right now. So London is up by 0.3%. The stock 600 absolutely flat. The Spanish market's up by 0.2%. The DAX is down a little bit. No clear signal, I don't think, at an index level as to what is really happening in the equity market this morning. So let's dive a little deeper. Ollie, what's going on?
Yeah, Guy, we're getting a couple of signals here from the sort of group level here where we see technology being sold off this morning, down by 1 percentage point. We should say, however, Guy, yesterday on NVIDIA Day, when we were talking about technology, the Stocks Europe 600 technology closed up 2% yesterday. So we're taking some of that off the table today, down by about 1%. The biggest gainers this morning are going to be in basic resources, utilities, and banks, all about 0.5 of 1 percentage point to the upside. Again, technology now is accelerating losses a little bit, down by 1 percentage point. But again, they rose 2% yesterday, so just taking some of that off the table.
Well, we'll dive more into the details there. You talked about the tech underperformance. It's your big heavyweights. It's actually your outperformers yesterday that we all kind of scratched our heads about. ASML, SAP are the big ones, your biggest weights on the index. You're seeing ASM as well, Infineon as well, all dropping. So tech really taking a little bit of a beating today, to your point. But to the upside, it's the rotation again. You're seeing the oil stocks, Guy, that we talked about underperforming yesterday, outperforming today and moving the index to the upside. But for me, it's still those single level stocks I want to keep an eye on. Grifols is, of course, top of mind for me, higher by about 1.8%, driving the entire Spanish index higher as well. But then you've got a couple of other names. One of your favorites as an underperformer, Schneider Electric.
It's got numbers next week, I think. We've got numbers next week. I think we've got numbers out from Schneider next week, maybe a bit of positioning around that. It's also an AI trade. So It does get caught up in that technology story. So while it is a kind of electrification, switching kind of a company, it is very much part of the that trade. So I think you can kind of basket it up maybe with what we're seeing, to Ollie's point about what was going on in the technology space. ASML is down, SAP is down, Schneider's down. Those are the three top points losers on the Stock 600 this morning. Feels like a little bit of an unwind, maybe at that position that we saw, maybe coming through to Ollie's point a little bit yesterday. Banks are up, commodities are up.
We should also mention that ThyssenKrupp is down 1.2%. That stock, we're not really welcoming the news that their CEO is taking a step down. We're talking about those individual moves, so that's going to be one that we've got our eye on.
I think there's some similarities between the Nokia story this morning and the Intel story. Both companies kind of have this kind of history behind them. They've got this name recognition. You guys didn't, but I did growing up with Nokia phones. A huge company that then fell by the wayside on the mobile phone handset side, but then switched to the gear side and is now struggling and is looking at breakups. to try and figure out how to right-size itself and get itself back on track. Intel's doing exactly the same thing right now and thinking about how it's going to maybe walk away from that foundry business and maybe not make the moves that it's talked about.
And both companies in sectors that are really supposed to be getting a lot of upside lifts that are really not, whether it's Intel with the chips and the semiconductor story and Nokia. You think about it, I mean, Huawei is being banned from a lot of countries within Europe. It should be. That and Ericsson should be catching a huge bid, but they just don't have the pricing that these Chinese companies have.
Ericsson, I think, has had a better time of things. Nokia has definitely struggled more and has lost out to Ericsson on some really key contracts. So it's I find it's interesting that these are two similarities, two names that did really well in the past, two CEOs that are really struggling to get this business. Gelsinger's really struggled to get Intel back on track, and apparently there's some key meetings coming up, talking about breaking the company up, talking about figuring out a new strategy going forward. Does he survive that? Certainly the bankers are in trying to figure out what they're going to do next.
It's a really interesting one. I thought the Ericsson story that you point out is crucial because the CEO has been very, obviously, anti-regulation, but been very vocal about it in a way that I haven't seen other European CEOs take on that topic. So that's one topic. That's the micro. I don't have a great pivot to this, but the macro also matters here. We're getting comments, or lines, I should say, from ECB Executive Board Member Isabel Schnabel speaking on inflation and monetary policy at an event in Estonia, basically saying a lot of what we already know here, that inflation momentum continues to be high, disinflation in services has stalled since November. If you look at the actual chart here, you do see a horizontal line. Looking at those live pictures, again, coming out of Estonia, she is saying that the current level of inflation understates the challenges that the ECB is facing. I thought that was some pretty interesting commentary. And that the pace of policy should proceed gradually and cautiously. Conditions are in place, however, for inflation to hit 2% by the end of 2025. That's really far away.
She's sounding cautious, isn't she? She is at the hawkish end of the spectrum.
Yeah, and I wonder how much coordination there is, because this echoes a lot of what we've been hearing from Nagel last night. Yeah, basically saying that, September, no one's too fussed about that. They seem to want to be pricing that in. But it's really the longer path for ECB rates, wanting to leave flexibility and really setting up a debate there at the ECB for what you do longer term with rates.
It's not mechanical, which I think is interesting, because the market's kind of is pricing this kind of relatively smooth story in terms of how quickly the rate cuts come. You maybe do start off a little bit faster, but actually in the ECB's case, maybe not, and then you kind of go sort of relatively steadily. She's saying that is not necessarily the case, maybe pushing back maybe against how the market has set this one up.
Can I just say it's interesting that she's making, and I think this is just a coincidence in timing here, that she's making these comments right off the back of that French inflation data, which did come below the 2% target. Harmonized, it didn't, but that's just 24 hours after we saw the same thing in Germany as well. I thought that was really fascinating.
Her point is that it's in services.
Right.
So the headline number is coming down, but she's worried about that core stickiness within services.
Which is something, by the way, you see in the U.S. as well. If you look at the data, that's where you're starting to see the stagnation. Okay, so that's the macro story. We'll see how that actually shows up. You're not seeing much market reaction off these comments here. Euro-dollar still at 110, briefly reacting to that French data that we got earlier, but that's going to be something we keep our eye on. Let's talk about where we go from here, what the next market moves may actually be. Let's bring in a Markets Live managing editor, Mark Cudmore, executive editor. I think he got promoted. Mark Cudmore joins the program. Mark, walk us through the story for FX, especially for euro-dollar here. We're getting some kind of positive inflation numbers, but we are still very much, it feels like the dollar seems to be the tail wagging the dog, for lack of a better term. Mark, your take on euro-dollar.
Yeah, I think that euro-dollar has broken out of the range, and I do think it is primarily a dollar story here, and that's generally the case. I think that, dollar softness has been a bit of a theme of the last couple of months. It's one of the positive factors out there, and I think that's going to largely be a trend going forward. But maybe trend is a dangerous word, because I don't expect it to be straight line. And I think that one of the issues is we're still pricing in too aggressive on rate cuts in the US, and I think at some point over the couple of months that's going to have corrections at some point, which will cause temporary dollar jumps. So I think that dollar will probably finish the year weaker than it is right now. I think the election will also weigh in it, but I don't think it's going to be a straight line affair, and I think the easy part of that dollar decline is behind us.
Well, listen, Mark, we talk about the dollar and the influence there, but I'm also looking at euro sterling, and you've seen an aggressive move down there, so it's not all the dollar. What are you expecting in sort of the differential between the euro and sterling going forward? We've really seen a lot of weakness out of cable, but also out of euro sterling.
I'm very bearish euro sterling. Now, I will say that I kind of messed this up because I published a bearish feature in Euro Sterling when we were down near the lows of the year. Luckily, we're back around that level right now again, but it was just before the bounce. But look, I think the UK story is very positive. This is a story which we've been very negative on for most of the last 8 years. And I think now we've got a bit of stability in government. We're seeing growth forecasts constantly be upgraded in the UK, admittedly from a very negative place. But the point is that the first derivative is in a positive direction in terms of the change. So I think that you've got cheap assets in the UK, and I think that also their inflation means that their sticky inflation means that they will keep rates a little bit higher, which might give a little bit of an edge, but it's not a problematic inflation story at the moment because we do have global disinflation. We do have energy prices at the lower end of the range, which is kind of helping. So I think that overall, I think Euro Sterling can go a lot higher in the next couple of months. And this goes back to Critty's question about Euro Dollar. Yeah, I think Euro Dollar's kind of broken out of its range, can go a bit higher, but it's more the dollar story there. So that's why I kind of swivel that to being dollar bearishness, not because I'm bullish euro, not at all bullish euro. And in fact, I think Euro Sterling goes lower.
Mark, good morning. It's Guy. I'm wondering about the debate that's happening within the markets team here at Bloomberg. I've got a piece by Mark Cudmore. Never mind Nvidia. Everything is looking bullish for stocks. I got a piece by JP and Michael Masika. There's a feeling of complacency in this market. I've got a piece by Simon White talking about stocks will lag bonds whether there's a recession or not. Talk me through the debate right now.
Yeah, so I think there's two different debates there. I think for Simon and I, it's a little bit more of a time span thing. He's talking about if a recession comes, what's going to happen there. And it's a bit of a longer term time span. On the shorter term period, most of my global team are with JP and Michael Mashika about kind of saying that they think that I'm complacent. And they think that, there's only really downside from here because stocks are expensive. Nvidia failed to surge. It failed to completely smash earnings as it did before. I have to say, I do not see like that before. You talked about the single name stock issues, and Guy, you remember the days of Nvidia earlier. In the mid-2000s, of Nokia, sorry, if you remember what happened to Nokia in the mid-2000s, in 2007, Nokia would just beat earnings, and there'd be disappointment, and the stock would fall. And then 2 days later, it would surge to a fresh record high again. And I'm not saying that Nvidia is going to suddenly be at a fresh record high today or Monday, but I think it's a similar dynamic here. This is an extremely solid story, delivering earnings. Sure, it's expensive. Not nearly as expensive as Tesla, and Tesla's been there for several years, or Costco. It's pretty equivalent to some other stocks out there, but it's a very, very good growth story with real money behind it. The macro factors are all bullish. The Fed wants to cut, global growth is good, consumer is strong, energy prices are at their lows. Everything is looking bullish right now from a macro perspective.
The stock market is saying soft landing. The bond market is saying hard landing. They can't be right, Mark. They can't both be right. I appreciate there's probably a bit of an overlap, but they can't both be right.
Yeah, and it's the bond market that is wrong. It looks very wrong at the moment. Now, at some point it's going to end in a hard landing, but it does not look anytime close. Economic growth in the US is strong. Globally, it's strong. Global growth forecast, it just got upgraded again this week, 3.1%. We were at 2.6% at the start of the year. We have all this negativity, and yet every week, global growth is getting better. US growth is fine. Consumer is still spending strong on almost all data fronts. The bond market is wrong to price so many cuts. So I think those yields will rise, and of course, that is a short-term problem for stocks. But again, it's a bull market. Going back to reminiscences of a stock operator, as old Turkey used to say, it's a bull market. Stop worrying about the short-term fluctuations here. The fact is, yields going higher because the economy is too strong for the cuts that are priced is not a negative for stocks. It causes short-term volatility, but it does not derail the stock market. Now, maybe in 6 months' time, or maybe in 3 or 4 months' time, maybe we're due then to price a hard landing and bond market will be right. But right now, today, and for the coming weeks, the stock market is right and the bond market is wrong.
That is a rarity to hear from you. Mark, we've got to settle the debate. Do stocks always go up?
Right now, yes, it's a bull market. I mean, and that phrase, for those who haven't read Reminiscences of the Stock Operator, the whole point is that, when it is a bull market, stop getting lost in the short-term fluctuations of trying to get a better dip or being tactical. Just realize that overall, things are going to be going higher in the weeks ahead. Who knows where we're going to be in 24 hours or like an exact week from now. But the point is, several weeks from now, a couple of months from now, this stock market will be higher, materially higher, globally, unless something sudden that we can't see changes. That's a true black swan. That none of the obvious catalysts look bearish at the moment. And that is the backdrop that we've got for the weeks ahead of us.
It's my perfect morning. Mark Cudmore, Critty Gupta, both on the same page.
Is that what happens?
They're agreeing.
Unclear.
You think stocks always go up. Mark thinks stocks
in the
always
long
go
term.
up.
Don't worry. Mark and I have had this discussion for years.
Thanks, Mark. Greatly appreciate it. Bloomberg's MLive Managing Editor, Mark Cudmore, joining us on Stocks Always Going Up. Until they don't. Core 6 looks like this morning. Let's take a look at what is happening. Technology stocks under a little bit of pressure across Europe. You can see that's the right-hand side of the screen. ASML, Schneider Electric, both softer this morning. Ferrari should always be in the red in my book, but actually recently it's been very much in the green, and the stock has been climbing sharply higher. A little bit of softness there. Luxury stocks are catching a bid, though, despite what we're seeing with Ferrari, and Novo is back as well. So those are the Core 6. That's what we're watching at the centre of Europe. Let's talk about some of the other single names that we're watching so carefully. Joe Easton, back over to you.
So we are seeing Grifols moving higher in Madrid this morning, around 2.7%. Remember, the Abu Dhabi and potentially Singaporean sovereign wealth funds teaming up with Brookfield. According to the Bloomberg report, they are in discussions around this potential deal. Remember, that company valued at around 5 billion euros. That is a bit of a boost for that one. Then we'll flip over, look at Nokia. Now, we had those reports about them potentially looking to divest that unit yesterday at the telecoms company. We did get comments overnight. The company says that unit is still a key part of the business and they haven't got anything to report, but still holding on to most of the gain that we saw yesterday. Potentially no smoke without fire on that one. Then we'll check in on ThyssenKrupp, a bit of a decline. Surprise exit of the company's steel CEO amid this tussle over a restructuring, but that stock lost more than half its value over the past couple of years, given weakness in demand for that company's steel products. And a quick look at the chips. Now, a few things going on. Yesterday, of course, we had the comments, the reports around the Dutch potentially looking to restrict more of the sales to China. That weighed on ASML, and we're seeing a dip back down again. The US chip stocks were also weak in late trading yesterday, potentially a bit of a hangover still from the Nvidia reports. So BE Semi, ASM following ASML lower this morning. But the biggest dropper we've got today is over in Copenhagen. Now, this is Ambu, down 12%. That was the worst drop in 2 years as I looked at my screen just a moment ago. Potentially worse than that one. It is medical tech. Looking at UK home builders, meanwhile, we've got some pricing data nationwide. A drop on the month, but over the past couple of years, prices are actually up pretty significantly in the UK, according to analysts. Bavarian Nordic, meanwhile, rattling through them today. We're going back into healthcare because this company is facing potential competition for its Mpox vaccine from a US company called BioEmergent over in the US last night, dropping on that one. Finally, one morning call to bring you Daimler Truck. This one is like the HSBC. It is upgraded to buy. They reckon that the decline in orders in the trucking sector potentially is going to bottom. They like that stock, and we're up 0.8% over in Germany today.
Joe Easton from our equities team, thank you so much. We're still getting some of these comments from Isabel Schnabel from the ECB, making a few comments this morning as we get European inflation data today, saying that basically policy should proceed gradually. Conditions are in place for inflation to hit 2%, but by the end of 2025, right? So that's a little longer than potentially some of the other ECB members say. There's concern about the stickiness. There's concern about sort of domestic inflation within Germany. In terms of euro dollar, where that's moving, it's basically dead flat today. We're struggling to get any sort of a convincing narrative on the euro right now. So coming up next, let's potential shareholders in healthcare telecoms as Grifols reportedly faces a takeover bid and Nokia considers selling off its mobile networks. We'll have more on the M&A action throughout the morning here in Europe. This is Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
DOJ or other authorities
could face bigger challenges next.
It was going to keep Real World Cup. This is a three
as the economic picture
covering the intersections of Hollywood, Silicon Valley.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Welcome back to the opening trade. About 21 minutes, I'm going to say, into the European trading session. We are seeing some marginal gains when you look at the Euro Stoxx 50 and kind of the broader indexes, some slight underperformance, I believe, in the DAX. But again, just really flat on the day, so nothing to write home about. But I wonder how much of that changes as we get more inflation data in Europe throughout the day. And then, of course, the PCE data ahead of the long weekend over in the States. That is your macro picture. But, of course, a lot of M&A news hitting the wire, or potential M&A news, from Grifols to some potential interest in Nokia, to, of course, the Pole deal over at Talgo, the train maker in Spain. There's a lot going on in the M&A space, and, of course, as a result, the equity space. Let's bring in an expert on the subject. Sylvia Viviano, head of equity capital markets over at UniCredit, joins the program this morning. Sylvia, a pleasure to have you this morning. Look, we just had a great conversation yesterday, actually, on the program with one of kind of the debt facilitators over at JP Morgan, making the argument that capital markets activity is actually due to open up, due to accelerate in the next 6 months or so, especially when it comes to Europe. Your thoughts on that timing?
Thank you, Greti, and good morning, everyone. Yeah, I do agree with you. So this is a discussion that has been going on for a while now, right? There have been high expectations on the equity capital markets since the end of last year. Then clearly there were several aspects, more from a macro and geopolitical perspective, that had a very strong impact on the pipeline. But the reality is that the rosters of companies that are ready and willing to hit the market and get public is important, is material, and is also very high quality. The reality is that, everyone, both from the bank side and the issuer side, and also from the private equity side, has been waiting for cooling off of the uncertainty and volatility in the market to be ready to hit the market first with the top quality players that they have in their portfolio, and with the companies that, because of the sectors they play in or because of the growth expectation, actually need and are willing and looking forward to get listed. So I do agree with you. Expectations are high, are positive, and for sure the pipeline is strong.
Sylvia, when we talk about this pipeline, though, and I think you're in the perfect vantage point to discuss this, I have a great little fun fact here that when you talk about IPOs in Europe, actually, when it comes to secondary listings as well, it's been a 19% jump year over year. This is a really big deal when we're talking about really high valuations. How long does that last, and how much of that action is coming from this kind of block trade bonanza that we're seeing?
I think the block trade bonanza will keep on being the key player in 2024. Reality is that because of the U.S. election, because of the specific calendar implication, there's not going to be a wide IPO listing window available for the issuers. So I do expect 2024 to end up with still many secondary trades, especially because, you know, the market performance, the fact that the stocks are at all-time high, are very conducive for the sell down from private equity or even primary raise for companies to grow, while IPOs are probably gearing more towards the 2025 window.
And in terms of the buildup for those IPOs, in what markets geographically do you see the most buildup? What do you think is going to be the hottest market in terms of listings in Europe in the coming year?
Unfortunately, Italy, there are some good players in Italy, but I don't think it's going to be the top country in Europe. Probably Germany is definitely at the top of the list. There are a lot of, even let's call them the, the big growth companies that actually need to get listed, but also big companies in PE portfolio that see the IPO as their main or only basically way out and the best way to actually move forward from a company perspective. So I do expect Germany to be very active. I do expect France to be quite active. And, clearly there is the big question mark on the UK. The push and everything and all the changes are quite, are definitely getting towards a positive and more open markets. But let's see what's going to happen in the UK.
Sylvia, good morning. It's Guy. The short vol trade seems to be back on. You surprised about that?
I don't know. Listen, it's coming back and forth. So I think the markets was expecting that, and no, the reality is that I'm not surprised. It's as we can see from the graph, it's a very volatile market, and so we need to take the best out of it.
In terms of, do you think it stays there? What do you think happens on the volatility trade going forward from here? Because that's going to have a big impact on risk.
Yes, but reality is right now we are normalized on what is, I do believe is a good level, right, between 14 and 16. The VIX has been trading there now for quite some time. We did see the spike clearly on the 5th of August, but I think the reaction of the market, of the investors, has been pretty conducive to what I think is going to be a more stabilized market. The reality is that, the impact of the rate cuts and all the speculation around the central banks, I do see it as already, I don't want to say factoring into the volatility and the investors' plays, but I do believe most of it is already being included in their investment decision as of today. So I do expect some maybe short-lived trade volatility spikes in the next weeks, but I do not expect to be spikes like what we saw in August this year.
Sylvia, great to catch up. Really fantastic to catch up. Thank you very much indeed. Sylvia Vivano, head of equity capital markets, joining us from UniCredit out of Milan. Interesting conversation. Inflation part of that central bank story, Critty.
It's a really fascinating one, and it's having ripple effects. So people are still treading with caution. You're seeing that in the debt markets. We had that conversation yesterday, and now you're seeing it in the equity markets as well. But coming up, we're going to dive into that inflation story. French inflation easing to its lowest level in 3 years. We're going to dive into the economics behind it. Stick with us. This is Bloomberg.
I think one of the dirty little secrets of credit is that the the businesses generally don't pay you back, right? The markets pay you back, M&A pays you back. So what is the most important thing is to always make sure that the borrower is worth more than the loan. And as long as the borrower is worth more than the loan, then it might be a rocky ride, but you're going to get your money back. And this world where there's these disruptive companies that, you know, have, let's call it 100, 200, 300 million of ARR, are looking to not raise equity capital because of the fact that they raised it in 2021 or 2022, and no one really wants a down round. But there's a lot of capacity in the capital structure to have, let's call it a structured solution. You know, we think that there's a lot of opportunity with those businesses.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
This is the opening trade. We're at 30 minutes in today's session. Seeing green on the screen, some slight outperformance over the French indexes, higher by 0.4%, but still light volume, light liquidity. Stock 600, however, hitting a record high. We'll see how long that lasts. We still got a long weekend going into the States. I'm going to try to get my words right. And plenty of inflation data before the end of the trading session, Ollie.
Yeah, and that record high being driven today by real estate, up by 1.3%. It's kind of interesting in terms of the composition. But we also are hearing from the European Central Bank, Isabel Schnabel, speaking right now, saying that a soft landing is more likely than a recession in the Eurozone, so some positive messaging there. Saying, though, that the 2% inflation target of the ECB will not really be reached until the end of 2025. And she will be speaking alongside some of the other speakers of the ECB. We're going to hear from Kazakhs, from Ren, from Simkus, Mueller, all set to join a panel later on today. So we're watching that very, very closely, particularly as we get inflation data from across the Eurozone. Yesterday in Germany, we got it a little bit weaker than anticipated. We got France in today, and we're going to get a little bit more throughout the mornings. And you can see there some of the estimates of what we are expecting there. And I'm very pleased to be joined by Imogen Bakra, who is the head of economics and market strategy at NatWest Markets. So listen, I think that we can basically not talk about September. That seems to be a foregone conclusion, 25 basis point cut. I think the question is now, from what we hear from Schnabel, from Nagel, is the sort of how the debate is evolving over at the ECB. And for me, something that I think maybe is underrated, maybe you have a view on this, is that something has changed at the ECB since this inflation period, and that is that they've sort of amended a little bit their mandate, where they say now they're targeting around 2%, which leads a little bit more into sort of interpretation, particularly from the hawks and the doves. How do you see that debate evolving? Do you see that bearing on monetary policy going forward?
Yeah, this was a shift that we kind of saw actually pre this big spike up in inflation that we had in the post-pandemic period, that we have this more flexibility, I suppose, around getting close to, but not quite at 2%, which does create an interesting dynamic between the hawks and the doves, what we have with the kind of Schnabels of the world. And even actually from Lade last week at Jackson Hole is this more cautious approach. We're getting back down to 2%, but we're not quite there yet. We're not sure when we will be there sustainably. And so we do need to be cautious about it. On the other side, you have the doves who are saying, look, we might might well be pretty close to 2% in this morning's print. Let's see. But all of the national prints that you mentioned so far suggest that we could be, 2.1 maybe.
Yeah, and if the Hawks want, 1.8 and the Dows want 2.2, that, is a material difference in terms of inflation and kind of where you set policy.
It is a difference, especially when we think about the fact that core inflation is still quite sticky. So although you have headline coming off and trending back towards target more clearly, core inflation this morning is probably still going to print quite high. And that's what the Hawks are really pointing to in terms of this more cautious approach. But I think generally, when we think about the way that markets are interpreting the guidance, it's probably relatively fairly priced. Like you say, September feels nailed on now for a rate cut, 25 basis points. And I think the inflation data that we got this morning and over the next couple of months will set the scene for one more additional rate cut before the year is out.
So quite a bit less than the market is pricing right now.
Well, the market is probably closer to 65-ish basis points this morning. So it's got those 2 rate cuts and then more or less 50-50 chance of an additional rate cut. That would imply back-to-back, cuts at consecutive meetings. At this point, that's probably fair without more data in hand. Like I say, our base case is 50, but probably risks to that are skewed towards more easing rather than less easing. So I wouldn't push back significantly against what the market is pricing currently.
Let's talk about the Bank of England for a moment. So the real surprise this month has been a bit of the bond market, the front end across Europe. Spain's down by 20 bips, Germany's down by 17 bips, the UK's up by 30 bips. In terms of the yield. The Bank of England seems to be much more cautious than even the ECB, definitely the Fed. The contrast between Powell and Bailey at Jackson Hole I thought was really interesting. Are we reading that wrong? Is that caution justified?
I think it is. When you think about what the Bank of England have been so concerned about over the last couple of months, they've really elevated service price inflation. They've elevated the importance of the tightness of the labour market, wage inflation. And when we look at the data in the UK, service price inflation is still above 5%. Yep. We had a downside surprise last month, but that came off the back of a big upside surprise in previous months. So service price inflation above 5% is just not consistent with meeting that 2% inflation target on a lasting and sustainable basis. And that's what's really key here. It's not about meeting it in any one month. It's about meeting it on a sustained basis. And so, when we think about the Federal Reserve and their dual mandate and the concerns that Chair Powell now has over the labour market with that rise in unemployment, it's a very different backdrop to what we're seeing in the UK, where actually last month unemployment fell. So I think the caution is right, and I agree that actually the contrast between what we heard from Chair Powell and Governor Bailey was, I think, the most interesting takeaway from Jackson Hole last week.
So where does that ultimately take the Bank of England? How many rate cuts can we get? How long does this rate cut sort of cycle last? Is it going to be a rate cutting cycle?
I think it is a rate-cutting cycle. Well, I suppose it depends how we define a cycle, really. We've had 3. Yeah, okay. We think it's a rate-cutting cycle then. We've already had 1 rate cut, don't forget, from the Bank of England. So they're a little bit further ahead from the Fed in that perspective. We think we probably get 1 more this year, probably in November when we get the monetary policy report. Yep. And then that's perhaps followed up by a couple more in 2025. The market at the moment thinks we probably get down to somewhere like 3.7%. That feels low to me, especially when we consider part of the reason that UK rates have underperformed versus other countries over the last couple of weeks is this ongoing concern around the fiscal backdrop in the UK and what inflationary impact we might see from the wage rises that we've had agreed over the last couple of weeks. So market pricing feels a little bit low, but I think Governor Bailey's caution, particularly when compared to Chair Powell's relative dovishness, is probably warranted.
You said my favorite word, which is the budget and fiscal and all those fun things. The markets don't actually seem that concerned about it, whether it's in the UK or whether it's in Europe. And you see it in the FX markets, you see that in the bond markets. You even see that in the States. And this is a looming issue. But I'm curious, where's the dislocation here? How is that something that shows up in the markets?
Yeah, I really think it's a risk that markets are actually underpricing. And probably in the UK specifically, as we head towards that October budget, I would expect this to become a much bigger market theme, for yields to be much higher, probably curves to be a little bit steeper. I know we've seen a big steepening trend already, but for that to continue. I think part of the reason we're seeing this being mispriced, in my view, in the UK, is that we've got a new government who are making a lot of noises around potential tax rises. And the market's really buying into this kind of fiscal conservative narrative that they campaigned on in the election period. But the problem is this government have ruled out many, big tax rises, and there is just this huge fiscal black hole that unfortunately isn't going to be able to be filled. The OBR projected that this year to be 140 billion for this fiscal year. We think that could rise in October to 180 billion. So not an inconsequential upward revision. The risks to that number are probably skewed to the upside as well.
Wow.
I wouldn't be that surprised to see 200 billion, for example. You add on redemptions to that, that's a very big supply number for gilts this year. And that's relatively sustained.
How does that work with QT?
So that's the other big question. There's a question mark around how QT continues going forward.
Yep.
The Bank of England will vote in September. It's possible that they stop active sales, but I think everybody at least expects passive QT to continue, and that is still very high next year. Almost 90 billion of gilts will run off the balance sheet, regardless of what they do with active sales. But there's an even bigger question around what the government do with those losses that the Bank of England is locking in, and I think that becomes actually the more interesting question than what happens to the pace of QT. The government have committed to meeting these fiscal rules, and if they need to borrow much more, they might need to actually tweak what those fiscal rules are in order to stick to that campaign manifesto.
There's some discussions that maybe actually they're going to tax the banks harder, and the justification for that banking tax levy will be maybe to mitigate some of those losses on the QT program. We'll see what the politics looks like. Imogen, thank you very much indeed. Imogen Bakra, Head of Economics and Market Strategy at NatWest Markets. Thank you very much indeed. Let's stay with the central bank story. ECB's Olli Rehn, Kazakh's Simkus Muller, they're all up in Estonia. Simkus is speaking right now. You can take a listen. I think you probably can also find this on your Bloomberg terminal as well. Let's listen in to what is being said in Tallinn.
Very different story is about this recent inflation period, when you mentioned already that we had more than 20%, while the euro area was 10% inflation on average at the peak. But here, what also matters, it's not only or what have mattered, not only the, so to say, openness or exposure to the external shocks such as energy shocks, but also fiscal response. So in many countries, there were fiscal measures that were intended to diminish the inflation. So for instance, decrease of VAT or some other measures, while in Lithuania, the authorities focus on keeping up the income of people, in a way resulting in the same or working in the same way, and has to help people to cover the increased expenses, but with a different effect on the inflation itself.
Right. Martis, please.
By and large, agree. But I think a couple of smaller points on this one as well is, but before I do that, thanks a lot for the invitation. It's a great event, and I have a true pleasure of being here. And I agree with your introductory points very much. So I hope we'll get back to the inflation forecasts and all these kind of things as well in this discussion. But about the different inflation rates, of course, the nature of the shock and very much the energy and closeness to Russia was important for the Baltics to be more vulnerable. Okay? But there's yet another element, the way this shock is being transmitted, so the transmission mechanisms. And what we see in the Baltics, that many of those are much, much quicker than in other European economies. For instance, administratively regulated prices that very much depend upon energy. In the Latvian case, they by default are reset twice a year. So the external shock travels into the economy very quickly. There are countries where the fixed prices time scale is years, not months. Okay, so that makes us different as well. But of course, also when energy prices come down, it gets priced out much quicker as well. And that's why the volatility in the Baltic economies for inflation has been very, very stark. Let me add one more thing. Of course, the time scale is important. Is it temporary? Is it permanent? If it is permanent, at the end of the day, it will cause problems. And that's why I think the fiscal policies are extremely important. How do they react? But I would say much more in terms of also structural policies. If European economy, if Euro area economy becomes much more aligned in its structure and its business cycle is increasingly aligned, then the shocks that will hit us are going to be much more symmetric across the Euro area. And then it would make life somewhat easier for monetary policy. But at the end of the day, it is also about structural policies. Okay? You cannot rely only on monetary policy to ensure that inflation.
So that's the conversation going on among a number of ECB Governing Council members in Tallinn today. As we get European inflation data, we remind everybody that yesterday we got the numbers out of Germany and Spain coming in below what had been anticipated by the market, really bolstering that case for the ECB to continue on its easing path. We will get the Eurozone figure a little later today, and Italy. And guys, Italy, I think inflation's down at like 1%, something like that in the Italian economy. Pretty remarkable when we're looking at, plus 2% across the rest of Europe.
And also given the level of spending that's been going on there as well. Obviously, that did cause an inflation spike. That seems to have unwound. I think the discussion about the impact and the speed of policy is interesting here as well, in as much as I think you're going to see very different reactions in various European economies. Sweden cutting rates, very short reaction time. Other economies in Europe, you're going to see potentially a much longer reaction time. And that's something that I think the ECB is going to find. It's going to be interesting for the ECB and others to judge that. And also, I think it's a story over in the States as well. The transmission of policy, they were talking about that at Jackson Hole.
It absolutely is. And this is where the labor market gets really intertwined to that story, because even though, and I think this is to your point about Italy as well, so even though you are seeing this fiscal spend show up, it's not showing up in the pockets of actual citizens. One, because of employment, and then second, because of wages as well. So you can spend into companies, into industry, into CapEx, et cetera, but that doesn't have a ripple effect or a wealth effect that you see in everyday citizens. Whereas in the States, it's a very different story, where wage growth has kept up with that, and so has employment. So I think that's the difference.
The interesting thing in the States is, did you hear what Dollar General had to say yesterday, talking about the impact that we're seeing in some of the lower quartile earning brackets, and how they basically run out and they're running on fumes now. And that is, we've been talking about that kind of build-up, that fear that's been growing, and maybe you're starting to see sort of more concrete evidence of that beginning to emerge. The upper end of the income bracket is still okay. So how do you balance those two factors out if you're the Fed?
So it is. I see your Dollar General. I'm going to raise you a Nordstrom, simply because when Nordstrom results came out, and we had this conversation about the kind of higher wealthy end consumer, it's driven Macy's sales, it's driven Nordstrom sales historically until this quarter, where for Nordstrom, their beats didn't come from Nordstrom, it came from Nordstrom Rack. And I think that's a big difference for our international audience that maybe hasn't been to a Nordstrom Rack, but basically they cater to that lower end consumer. They're saying that's where the growth is, because even the wealthiest consumers
trading
spending,
Well, that's interesting. Yeah, well, we're going to take it next from the Dollar General. We've just been in Tallinn. We're going to head to Paris next, and maybe actually Serbia, where Emmanuel Macron is going to sell some fighter jets, apparently. So we have to talk about that. We have to talk about the political story that's going on within France. Maybe we'll even touch Telegram. There is a lot happening in France, guys, and we'll get to all of that with our Paris Bureau Chief next. This is Bloomberg.
What legacy I would love to leave is to make sure that in my village I have infrastructure. So long when I'm gone, things are still working. Then I have done my job. And if some people get inspired through my work and then try to engage themselves for their community and create something that is inspiring for everyone, I will be happy.
What's the best piece of advice you would give to someone young who wants to make a difference actually in this world? In architecture or with something else?
Wow, I'm not the right one to just do that.
I think you are.
Yeah, but with the pressure you have, and then you try to be the good one, the fancy guy, the intellectual one, I have no advice then to believe in yourself and really work hard. You know, when I started, no one would have imagined that I will be able to see my name connected with Aga Khan or Pritzker or sitting at Bloomberg to talk about sustainability, about future of sales. No, myself 5 years ago, if you told me that, I will say no. I will never imagine. So I will encourage everyone to believe in what you're doing and not try to run after the newest of the newest. Just be consistent. Just work on things that matters for you. Really, at the long term, it pays.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
My agenda includes what we need to do to bring down the price of groceries. For example, dealing with an issue like price gouging. What we need to do to extend the child tax credit to help young families be able to take care of their children in their most formative years. What we need to do to bring down the cost of housing. And I made that clear on the debate stage in 2020, that I would not ban fracking. As vice president, I did not ban fracking. As president, I will not ban fracking. There should be consequence. We have laws that have to be followed and enforced, that address and deal with people who cross our border illegally. And I think it would be to the benefit of the American public to have a member of my cabinet who was a Republican. We have to get a deal done. This war must end. In the meantime, and we must get a deal that is about getting the hostages out. I've met with the families of the American hostages. Let's get the hostages out. Let's get the ceasefire done.
Vice President Kamala Harris and Democratic nominee for the U.S. presidential election speaking to CNN in her first sit-down interview since becoming the nominee and taking over from Joe Biden in that race. One of the key pieces of that kind of sound in the interview is the fact that she is actually thinking about including a Republican in her cabinet. That is something new we've heard from the Harris campaign. Certainly something we're going to be watching in terms of who those candidates might actually be. It's a similar story over in Europe as well, specifically in Brussels. Today is the deadline for countries to send their picks for new EU Commissioner Ursula von der Leyen. Successful candidates will serve in the European Commission president's next mandate at the top of the EU's executive arm. Let's bring in Bloomberg Bureau Chief in Brussels, Kevin Whitelaw, to walk us through it. Kevin, what do we know about this process and who's being considered?
Right. Well, so every EU country needs to nominate somebody to be a commissioner. Almost all of them have submitted the names to the Commission President, Ursula von der Leyen. We're still waiting for the last 3 to do so. She'd actually asked for 2 picks, 1 man, 1 woman from each country. Essentially, nobody's done that. And so one of her first challenges is going to be trying to figure out if there's any way for her to deliver on her promise to have a gender-balanced commission. It's going to be an extremely complicated thing. Most countries want to say, hey, we get to pick who we send, and you're going to have to make that work. So her next job, once she gets all those names, is going to be figuring out which commissioner, which country gets which portfolio of all the different sort of commission roles.
Morning, Kevin. And you mentioned the sort of enormous complexity of that. There's also enormous complexity surrounding getting these Russian assets and getting that money monetized fully to Ukraine. We had the foreign minister in Brussels yesterday. What kind of reassurance is he getting there? There's some real anxiety growing that that financing might not be on as firm footing as anticipated.
Right. Well, the whole idea behind this is, of course, to essentially create a giant loan that's going to give the Ukrainians a more dependable and larger cash flow. And it's all sort of based off of using these profits from these frozen Russian assets to essentially guarantee that loan. This is supposed to be a G7 thing, and so it's supposed to be done in coordination, in particular with the United States. But the U.S. has some reservations that are ongoing about sort of how durable the European sanctions regime is. Sanctions sort of have to be renewed every 6 months, and so there's this tiny bit of legal uncertainty surrounding that. So the EU so far has really been unable to come up with an agreement to sort of change that. Anything requires unanimity, and countries like Hungary have simply been blocking that. But yesterday we did hear that some of the EU are prepared to at least have the EU move ahead on its own. The idea there being that at least Ukraine would get a big chunk of it, and it would also be a signal to the United States that the EU trusts this regime and trusts that these assets really are going to remain frozen for a very long time.
Kevin, thanks for the update. Really appreciate it. Kevin Whitelaw, Bloomberg's bureau chief, joining us out of Brussels. We've got inflation data out of France, but politics is really the story that we're watching in Paris right now. Alan Katz, Bloomberg's Paris bureau chief, joining us now. Alan, I want to start with politics, and I want to start with the idea that maybe Sunday we get a prime minister. How kind of optimistic are you?
I mean, it's hard to be too optimistic. I mean, one day, it's true, absolutely, one day there will be a prime minister. Will that be soon? I don't know. Last night in Belgrade, French President Emmanuel Macron said he was doing his best to get a prime minister. Of course, it's entirely up to him under the French Constitution. He's held a whole series of what he's called consultations with various political parties and various other leaders in France. He's not come up with anything yet. There's some rumors that there might be an announcement on Sunday, but then again, there have been rumors that there would be an announcement every day all this week, and nothing has happened. So the answer is yes, France one day will have a prime minister. Will that be this weekend? The reason it might be this weekend is that school starts on Monday morning in France. So it's sort of like the back-to-school moment, including perhaps for the government. But we'll have to see. We really don't have any sort of positive feedback on that yet.
And Alan, as we've been talking about this for the last couple of weeks, I'm wondering, does Macron's hand get stronger and stronger as time goes on here? Because it feels like they can't really get their sort of act together on the left, and that he is sort of now rising in the polls. Is he becoming in a more powerful position? And can he spin this eventually as kind of a win?
Well, possibly. So in France, there's something called the stratégie de pourrissement, which means like sort of letting it rot. And that appears to be, in part, what Macron might be doing. And you mentioned it quite rightly, that on the left, there have been some rumblings, particularly within the Socialist Party, that they're unhappy sort of being allied with Jean-Luc Mélenchon and France Unbowed, sort of the far left part of this new Popular Front, this coalition on the left that was created for this election. And so if Macron could sort of split that apart in some way, maybe with a center-left, sort of non-political person as prime minister, could he spin this as a win? It's possible. It's still quite difficult for him. His party lost a lot of seats in the election. It's very hard for him to come up with this as a real win for him. But your point is a good one, that seems to be what he might be trying to do.
Yeah. Well, Alan Katz, thank you so much on Macron's political acrobatics. Paris bureau chief joining us from Paris there. We're looking at the unemployment figures out of Germany. You know, unemployment unchanged in Germany, 6%, something we're watching ahead of these elections. We should say that 6% is the highest level of German unemployment since, I think, April of 2021, so relatively elevated in Germany.
Is this something that feeds into the conversation this weekend?
I think it certainly will. I mean, you look at the sort of jobs and the real anxiety that exists around the German economy. It has also hit it in the manufacturing, but a lot of it is just theoretical down the line. We feel like something bad is coming in Germany. We have these two elections on Sunday in the eastern states, really expecting the AfD, the far right, to do quite well there.
Thanks for joining us this week. It's been a great pleasure.
It's been a great pleasure for me.
Even got a shout out for your dad as well, which is a big win. That wraps this show up. Anna's going to be back on Monday. I'll be back in Berlin. We'll wrap up those elections. The polls is next. This is Bloomberg.
is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
European stocks closing in on a fourth week of gains. Hopes growing of lower rates in the Eurozone and a soft landing, of course, over in the United States. We're going to have more key inflation data from both sides of the Atlantic. It's going to come out throughout the day. We're going to analyze that for you. Kamala Harris speaking in her first TV interview as the Democratic nominee, saying voters are ready to turn the page on Donald Trump. She is now leading or tied in the most consequential swing states. This, according to Bloomberg's latest poll. Plus, Intel explores its options. Bloomberg learning that the chipmaker is speaking with investment bankers to help it navigate the most difficult period in this company's 56-year history. Let's take a look at European markets. We're kind of post-NVIDIA, pre the Labor Day holiday over in the United States. So the US is going to be out on Monday. You're going to see, therefore, I think, cautious trading as we head towards that long weekend over in the United States. At the moment, it's green, but it's not that green. The IBEX is outperforming. Italy's outperforming. Elsewhere, we're up between 1/10 and 0.4%. The cross-asset board looks a little bit like this. US futures at the moment are reasonably becalmed to 56.31. We're up by 0.4%. The US 10-year, there's a little bit of a bid there. Euro dollar, a little bit of a bid back into that on the back of the inflation data today, but not by much. We're still sub 111, 110.83. Crude is up by 0.4%. So that's the picture in terms of the markets. Let's analyze exactly how the latest data and the latest corporate stories are folding into all of that and talk to some of our great guests that we've got lined up.
Makers and market movers. This is The Pulse with Francine Lacqua.
Friday morning. Good morning. Welcome to The Pulse. I'm Guy Johnson in for Francine Lacqua. Markets, okay, let's separate the markets out. Bond market thinks that we're going to see a recession. Equity market thinks that we're going to see a soft landing. That seems to be the sense right now. We seem to have got through NVIDIA without much turbulence. Various reasons for that in terms of the way options were priced. But it's been a month where we've seen significant volatility. Remember the 5th? Remember the volatility we saw during that period? I think the game is about to start getting really interesting. We're getting into the labor market data next week out of the United States. And we seem to be largely factoring in rate cuts coming through from the ECB and the Federal Reserve. Aliki Rifiak, portfolio manager at Robeco, joins us now on set. Nice to see you.
Good to see you too.
The bond market wants a recession, thinks a recession's coming. The equity market thinks it's a soft landing. Which do you think is right?
Listen, we have heard from the Fed at the recent Jackson Hole that there is a somewhat shift from the focus from inflation towards the downside risks that may come due to a weakening labor market. So prospectively, we are focusing on the next labor report to see if this is going to be true. But also, we are expecting now that rate cuts would start in the U.S. with the first rate cut priced in at 25 basis points. Thereafter, the picture remains uncertain because what we really need to see is labor market weakening to justify further rate cuts and more deep rate cuts, but also the impact from financial conditions, whether we would see a tightening and how this would affect the overall credit market as well.
If you see 25 basis points, does that signal a soft landing? If we see 50 basis points in the Fed, does that signal a hard landing?
It depends. 50 basis points is quite a deep cut. The market is not pricing in this yet. And it could potentially be the start of a much faster pace in terms of rate cuts by the Fed. But we really need to see the data because upcoming rate cuts are going to be data dependent. And what we've seen yesterday, it was actually an upward revision in GDP. US GDP growth came at 3%, surprised somewhat on the upside, and the main driver has been consumer spending. So the consumer is spending for now. And if this pattern continues, obviously inflation is going to be potentially higher what everybody might be expecting, and rate cuts might not materialize as fast as what is priced in now.
I can't believe these words are going to come out of my mouth. Is there a danger that the bond market is wrong? And the Fed is not going to cut as aggressively as currently being priced. We've got 100 bips priced between now and the end of the year and into next year. The ECB is not going to be as active as maybe we anticipate that it will be. How big a danger is there, to your point, that actually the data are going to come through better and the inflation risk is going to rematerialize as something that we need to worry about?
I think from a positioning perspective, what we favor as well and what also the market is positioned for is steepening on the yield curve. Currently, we don't want to take an outright view on duration, basically ratifying a potential hard landing scenario. At 3.8%, the US 10-year rate seems too low under a soft landing and a terminal rate of 3%. So for now, we just on a wait-and-see mode in order to understand the evolving economic environment and position for that when the right time comes.
But to come back to the beginning, does the evolving economic environment, do you think it favours equities or bonds at this point in time? I keep talking to people. This is the debate that is really getting going at the moment. Nobody can figure out whether or not you want to be in bonds, overweight bonds, or equities. Equities are trading up near kind of record highs. How much complacency is built into that, given some of the economic backdrop that we're watching at the moment?
I think for now, from a tactical asset allocation perspective, we have a mild overweight to equities, and the reason being is, despite that we see very lofty valuations, especially in the US space, there are pockets of value that selectively we have added in terms of...
In the States?
In overall globally. So we favor mainly healthcare, which is more defensive. We have seen also the leadership changing from cyclical to defensive sectors. And this would play out well even if we are at early stages of recession. Also, we have closed our underweight to European markets, and Europe is also an area where we see inflation coming down. We have noted yesterday German inflation has surprised on the downside. In the morning, France has printed inflation also close to 2%, what the market was expecting. And prospectively, we're expecting also European inflation to come around 2% level today. So Europe has already started to perform. As well, on the financial space, we have seen some solid earnings, especially from banks. There also the story is a more favorable one, as we are also expect some of the regulatory capital reforms to be pushed back in 2026.
It would be remiss of me to leave August without talking about the volatility that happened at the beginning of August. What was that? Should we get used to more volatility? Do you think we're going to see more volatility spikes? How does that affect my risk tolerance coming out of August into September, October, which tend to be reasonably volatile months as well?
Absolutely. The very interesting pattern that we've seen in August is that despite weak seasonality, we have seen equity flows actually being fed through the market, especially after the market pullback that we've seen earlier in the month. So from the perspective of sentiment has turned bullish. Equity flows also have accelerated. We had 18 weeks of positive equity inflows. Yep. And this has brought the overall flows to 250 billion, which is quite substantial.
Are you surprised by that? It seems as if we've just ignored, we just put what happened at the beginning of August in the rearview mirror, and we're not worried about it anymore. Is the market underplaying the risk that we do see more aftershocks or shocks when it comes to volatility?
Listen, the market, I think, is trading where fundamentals are, and the latest earnings reports have shown a healthy earnings growth of 11%, and this is supportive for now from a fundamental perspective of overall equity risk. Going forward, obviously, there are other risks, election risks as well in the US that could potentially create more volatility. But for now, this could be potentially seen as a buying opportunity, buying the dip for investors to capitalize selectively where markets reprice.
Aliki, nice to see you. Thank you very much indeed for stopping by this Friday to join us here at Bloomberg. Aliki Rufiak, Portfolio Manager Rebecca, joining us on what's happening in these markets. We're heading into a long weekend over in the United States. You're probably going to see volume rolling over a little bit into that in maybe the latter parts of today's session. Pre-market, though, we've got some interesting stocks that we're watching out for at the moment. Pat Gelsinger apparently talking to his bankers right now, wondering whether or not he should break up Intel. It's been a really difficult run for that business. The stock is popping a little bit this morning on reports of that. Dell Technology up very strongly. Those numbers were good. It's doing well on the AI server side of things at the moment. That's very much being reflected in the pop we're seeing in the stock this morning after the company reported that late last night. That stock is up by 6% going into the open over in the United States. And Lululemon also on a little bit of a tear this morning, up by nearly 4%. Sales guidance beating, being good, but also seen as being beatable going forward from here. So that stock on the front foot as well this morning. US futures largely becalmed, though. Not a big pop anticipated stateside as we come towards the end of this week. Politics, though, is front and centre stateside. Kamala Harris laying out her plans for the White House. She did a first critical interview. She did it with CNN. This is the first interview she's done since she took the Democratic presidential nomination. She did it with her vice presidential pick as well, sitting next to her. We'll discuss all of that next. This is Bloomberg.
Is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have Take-Two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
You're watching The Close.
Welcome to Balance of Power.
This is Bloomberg.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
My agenda includes what we need to do to bring down the price of groceries. For example, dealing with an issue like price gouging. What we need to do to extend the child tax credit to help young families be able to take care of their children in their most formative years. What we need to do to bring down the cost of housing. And I made that clear on the debate stage in 2020, that I would not ban fracking. As vice president, I did not ban fracking. As president, I will not ban fracking. There should be consequence. We have laws that have to be followed and enforced, that address and deal with people who cross our border illegally. And I think it would be to the benefit of the American public to have a member of my cabinet who was a Republican. We have to get a deal done. This war must end, and we must get a deal that is about getting the hostages out. I've met with the families of the American hostages. Let's get the hostages out. Let's get the ceasefire done.
Kamala Harris, the Democratic presidential nominee, sitting alongside her VP as well. We'll see what impact this interview with CNN has. It wasn't amazing, but on the other hand, it wasn't a disaster either. Harris pledging to address economic issues, talking about the middle class, talking about a possible ceasefire in the Middle East, talking about putting a Republican in her cabinet. She did okay. That seems to be the sense at the moment. Bloomberg senior writer who covers this subject, Stephanie Baker, joining us now. What's your take? How did she do?
I think you're right. There were no big surprises, which for Harris will be counted as a success.
Yep.
The only reason why there was so much attention on this interview is because she hasn't done one since becoming the nominee. So she needs to do more of them so that there's less riding on each of these interviews. I think it was pretty clear that she's better on the stump giving these speeches than she is in a sit-down, unscripted interview where she was at times a bit rambling. She stuck to Biden's policies and supported his positions on a number of issues, which she had a very difficult challenge there. She had a difficult time threading that needle of supporting the administration she's been part of for the past 3.5 years while forging some new political identity that makes her, distinguishes her from Biden.
But the Republicans are looking for a target. They're looking for something to shoot at. She didn't present much of a target in this interview.
She didn't, and that was what she set out to do. She spoke very forcefully supporting support for Israel, Biden's position on Israel, which I think will, be a disappointment for some within the Democratic Party. It was interesting that she wasn't even asked about Russia-Ukraine. I think she's viewed as having, sticking with Biden's position on that, with strong support for Ukraine and a tough stance on Russia. I think this was a success for her, but she needs to do more of them.
Maybe she needs to get better at them, but a fairly good first start. I think probably her strategist would argue. How did Tim Walz do? And is the sum of the parts of the two of them greater? Because the criticism of the Republicans is that they're kind of that we're seeing the presidential nominee and the vice presidential nominee kind of in different orbits. Are they in the same orbit? These two?
I think it's a really unique team that they've forged. They came under criticism for doing this interview jointly, which I think was, wrong. Yeah. It's tradition for nominees to sit down with their VP pick right after the convention. Trump did it with Vance. Biden did it with Harris. He was unusually quiet during this interview. He didn't say much at certain points. He effectively defended his positions, his misspeaking on things like his military record or his family struggles with fertility. I do think they wanted to put him out there because he does appeal to the kind of voters that she is having a harder time with, non-educated white men in swing states. And I think as a result, the combination of the two on this ticket is greater than, the sum of the parts.
In terms of the polling, we've done some polling. She's certainly the honeymoon bounce that started when she first was kind of put on the ticket seems to have continued. If I was, and I'm reading a lot of this coming through from the Trump camp at the moment, their strategists are basically saying it should be greater. She should be miles ahead. Why isn't she miles ahead? Why isn't she polling even greater than she is right now? Because at some point that honeymoon is going to fade, and at that point this is going to become a really tight race that is probably going to favor Trump.
It's true. I mean, she's narrowed the race considerably, but it's still statistically a dead heat, which is kind of remarkable considering all the enthusiasm that we saw after her nomination, after the Democratic National Convention. She's pulled ahead in crucial swing states, notably North Carolina, which, I think is a real surprise. But you would expect her in many ways to be even further ahead. Whether or not voters just need a little bit more time to get to know her and Walt, and she will cement that lead and pull further ahead. Whether abortion isn't really being accounted for in these polls, because it's a really important issue for a lot of voters in swing states. Is she going to be able to build on this? Is this a sugar rush that's just going to fade? It's hard to tell, but I agree with you. I think I would expect her to be further ahead in the polls at this point, given the enthusiasm we've seen.
Stephanie, great stuff. Thank you very much indeed. The breakdown of what we saw last night in that CNN interview. Bloomberg senior writer and investigative reporter Stephanie Baker. Coming up, we'll take you back to some of the corporate news. Intel calling in the investment bankers to help plot a path through the most difficult period in this company's history. We'll have the details of this story next. This is Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg. Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Or other authorities.
Could face bigger challenges next.
Fed was going to keep rates. World Cup. This is a three.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
Intel is up pre-market. The story is that this is a company that is said to be exploring options to cope with a difficult and historic slump. Pat Gelsinger has really struggled to turn this company around. The bankers are now talking about various options, including maybe spinning off the foundry business and putting some of the big kind of expansion projects on hold. Bloomberg Intelligence senior analyst Robert Lee joins us now. He's had a busy week. What is the challenge here, and what are they talking about in terms of the remedies?
Okay, well, Intel's growth is tied to the PC industry sector. In terms of PC processors, it's dominated for many decades. Its problem, though, is that the PC industry is mature, it's growth, so it's tried several times over the years to diversify into new markets. Casting your mind back 15 years ago, it tried to make it big in mobile, didn't really pay off. More recently, it's tried it in the foundry sector. As you appreciate, that's dominated by TSMC and the Taiwanese. So it's struggled to grow its top line. It also is a business because it's what's referred to as an integrated device manufacturer. It designs the chips, it makes them, it markets them, it packages them. It does everything. So it's carrying a very large cost base. So you may remember earlier this month, it announced plans to let go of around 15% of headcount. But the foundry business, where it's struggling to compete against TSMC, has been a problem for it because it's losing $7 or $8 billion per year. So this unconfirmed plan is that they could potentially look to spin off the foundry business, obviously, freeing up resources to potentially expand into other areas. And I guess one of those will probably be AI, but we will see.
AI seems to be the subject of the week. I see Reuters reporting that Amazon's revamped Alexa is going to be powered by Anthropic. Let's talk a little bit about the OpenAI story. Everybody wants to get in. Lots of people are bidding potentially to be part of the funding round. NVIDIA could be the latest in that story. Why would it want to get in on the OpenAI story?
Well, obviously, OpenAI with its ChatGPT platform is one of the, it's got first mover advantage, is one of the most dominant platforms out there on the chatbot side. And obviously, they are a significant customer of NVIDIA. So therefore, it makes a lot of sense strategically to take perhaps a stake in one of its main customers and try and, cement its position within the industry. So I think that would be the rationale behind that. There's also talk of maybe Apple taking a stake, but we'll have to wait and see on that front.
Robert, thank you very much indeed. Greatly appreciated. Been a busy week. We've really appreciated the input that you've been giving us throughout this week. Bloomberg Intelligence senior analyst Robert Lee, thank you very much indeed. Coming up, we're going to talk about what is happening in the emerging market credit business. A weakened dollar, falling treasury yields, making emerging market assets much more attractive. We're going to get a take on that story next. Tang Nguyen is going to be joining us from BNP Paribas. We'll get a view. That's next. This is Bloomberg.
I've seen firsthand how some fashion businesses make women feel. And I think there's one thing, being really vocal and being an Instagram activist and talking about something, there's a difference than putting your money where your mouth is and really trying to do something about the problem. And that's what I did with that business. It was about how do I take everything that I know and I've learned and actually do the opposite. And I think that as a young black female entrepreneur, the only thing that I could do was what I know from my experience. And the honest truth is, I didn't set out to create a company that was like deeply rooted in the principles of inclusivity and diversity. I set out to make a company that was right for me and my friends. And I knew that if I had a problem, chances are somebody else does. And I think that's where so many businesses are, you know, created, when you're solving a problem that's real for you and therefore real for the consumer.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Morning, welcome back. You are watching The Pulse, approaching half past the hour. I'm Guy Johnson in London, in for Francine Lacroix. Let's talk about the top stories this morning. European stocks closing in on a fourth week of gains. The Stock 600 is actually at a record high this morning. We are seeing hopes of growth, lower rates, soft landing in the United States, all playing out. It's a long weekend coming up in the United States. We do have some inflation data before we get there on the other side of the Atlantic, plus this side of the Atlantic as well. Talking of politics, let's show you what is happening with Kamala Harris speaking in her first TV interview since she became the Democratic nominee. She's talking to CNN, saying basically voters are ready to turn the page on Donald Trump. She's now leading or tied in the most consequential swing states in the United States. This according to Bloomberg's latest polling. Plus, Intel exploring its options. Bloomberg learning that the chip maker is speaking with its investment bankers, helping to navigate maybe the most difficult period in this 56-year-old company's history. What does it do next? Is it going to spin off the foundry business? Key questions need to be answered by Pat Gelsinger. Let's talk about where we are in terms of the rate story as well. We've got key data coming out, core PCE coming out of the United States a little bit later on. Payrolls are next week, though. The recent signals from the Fed seem to indicate that it's going to be cutting rates in September. That feels fairly nailed down. The ECB kind of moving in that direction as well. We've seen, obviously, the bond market moving this month. We've seen lower yields, particularly at the front end, steeper curves, except in the UK, which is interesting, but maybe we'll come back to that story a little bit later on. The thing that's kind of flown under the radar a little bit for me over the last month has actually been the strong performance we've seen in the emerging market credit space. China is one area that I really want to focus on. But the politics, let's come back to the politics and talk about how this could impact this going forward from here. Trang Nguyen, Global Head of Emerging Market Credit Strategy at BNP Paribas, joining me around the table this morning. Nice to see you. Let's talk about politics. US elections coming up. Mexico's a key credit. Walk me through how much is priced in, because we seem to be flip-flopping at the moment, and people I'm talking to can't quite figure out what to do. You've got a Harris trade, you've got a Trump trade. What is the Harris-Trump trade in relation to the EM credit space?
Sure, well, thanks for having me. Now, if we look at the performance of EM credit more recently, we've really fully retraced the sell-off that we saw on the back of the widening in early August on the back of U.S. growth concerns. So I would say we're not really looking at a whole lot of premium here. And in the run-up to the U.S. elections, we're going to see more volatility. And history will tell us that typically that picks up after the Labor Day holidays in the U.S.
Yeah, that's Monday.
So, exactly. So next week, and so we have U.S. politics, a lot of uncertainty, and there's also some seasonality that we're concerned about as well, given that September is typically when issuance volumes will also ramp up, and that puts more pressure on credit spreads also.
How big a difference, what's the spread between Trump and Harris in terms of the impact that they could have in terms of these trades?
Well, I'd say the Harris trade is status quo.
Right.
Trump will induce more uncertainty, and I think that there are several channels that markets will want to assess. It's going to be the tariff channel, and it's going to be the fiscal channel as well, with varying implications on EM. Now, this is not unprecedented because we have a 2016 playbook that we can lean on. Now, take Mexico, which you mentioned. If you adjust for credit spreads now versus for Mexico versus where credit markets are now compared to 2016, Mexico is very tight. So that to me suggests that we're not really seeing a whole lot of political premium in the price at the moment. And so that calls for more volatility ahead.
So is that tightness just reflecting the polls? The fact, talk me through how tight has it got since Harris came onto the ticket? Has it tightened since Harris came onto the ticket?
Yeah, so I think perhaps a couple of months ago, markets were working with a more decisive assumption that a Trump victory was in the cards. And now we're looking at very tight polls. Right, so that uncertainty perhaps is one reason why we're not seeing a whole lot of political premium in credit markets. But I think that that's going to pick up, and that's going to change come next week.
What's the reader? At the moment, there seems to be some certainty that the Fed, the ECB, etc., are going to be cutting. People I'm talking to are kind of less certain about kind of what happens next. There seems to be an increasing sort of divergence between the folks that I'm talking to about whether or not inflation comes back, which seems like a horrible risk, and whether or not ultimately you see a sort of more of a hard landing. In terms of the kind of the tail risks you're seeing in those DM markets, walk me through how that gets amplified maybe into the EM markets.
So I'd say the growth concerns are now at the fore, but I don't think that's what markets are going to be focused on. Our BNP credit-based recession models still put the odds of a recession in the next year at below 30%.
Right.
So yes, it is a concern given that the markets were really not pricing a recession, barely pricing a recession at all. So that repricing has to happen, but I think the politics are going to trump the growth and inflation concerns in the near term.
Okay, so that's what's going to cause the volatility. The thing that's really flown under the radar for me, and with you coming on, I sort of checked a few numbers. China credit, a real outperformer. The numbers are really quite surprising, given the kind of the backdrop that we're seeing more broadly. The numbers are really quite... Why?
So the narrative remains unchanged. Growth is tepid and stimulus measures are timid.
Yeah.
But I think it's enough to kind of put a floor on prices. And, this morning I saw an article on the terminal that the Chinese authorities are asking banks to reset mortgage rates again. Again, this is not unprecedented. We saw this last year as well when the PBOC asked banks to reset mortgage rates so that the gap between existing loans and the prevailing market rates can be narrowed. So this, in our view, could result in some savings, so boost to savings and therefore consumption. But whether that will actually boost sales in the physical market remains to be seen. But this is kind of symptomatic of the measures that the authorities are carrying out, which is enough to kind of stem further sell-off in bond markets. And that's why we see China high-yield markets are up 12% this year.
Yeah, amazing. The currency, is the currency just an effect of that, do you think? We're seeing the yuan actually getting a bit of a boost as well.
Well, there's a broader macro narrative there, right? We have Fed cuts, which are now accepted as the base case. Asian currencies previously were seen as, funding currencies, low carry. So the rally in global bond yields have kind of reduced that narrative a little bit. And therefore, for China specifically, beyond this broader macro narrative, there's also hedging activities by corporates. And so we see room for this appreciation to actually continue.
So political volatility is something we need to pay attention to. Seems to be the message that I'm getting thus far. Walk me through the rest of the year. Where am I watching? Give me the sense of kind of where the opportunity lies, where the threat lies as well, in terms of some of that volatility and where I want to kind of manage my risk.
Yeah, so I've been very constructive in EM high-yield credit for some time, but we have to, really be prudent here. EM CCC has rallied over 30% year-to-date. We have conclusions in restructuring stories, which is a positive for the asset class. The chapter is now turning. In fact, Ukraine bonds and new restructured bonds are settling today, so we have a new set of bonds to trade. But at the moment, when the CCC complex is up over 30%, when you have election risk, which we think are going to be at the forefront, we have to be a bit more prudent here.
So headroom, more, not maybe a little bit more to come, but it's going to be hard yards to get those gains from here on in. Does that mean I want to take some risk off the table?
Well, I think that's probably a prudent thing. If you've held Ukraine bonds, if you held CCC and it's been up 30, 40, 50%.
Yep.
But I think the strategic thesis remains intact here. I think there is still a strong case for EM credit, and with Fed cuts, that also means that inflows will probably come back as well.
Great to see you. Thanks very much indeed for stopping by to see us. I'm glad I paid attention. Trang Nguyen, the Global Head of EM Credit Strategy. Thank you very much indeed. Let's talk about some of the corporate stories we were watching this morning. Bloomberg has learned that Brookfield Asset Management is in talk with several investment funds to join a bid to acquire the Spanish blood pharma company Grifols. Sources say Abu Dhabi's sovereign wealth fund, ADQ, and the Singaporean counterpart, GIC, are amongst the investors that Brookfield has held talks with over a potential partnership. No agreement has been reached with any of the funds. Remember, this is effectively a kind of take private that we're watching unfold here. ThyssenKrupp Steel Unit CEO Bernard Osberg will leave the company along with several supervisory board members and other top managers following a dispute over the troubled division's future. Dennis Grimm will take over as interim CEO of the unit. The move comes after weeks of tussles between executives and worker representatives over efforts to restructure this German business. And Bloomberg understands that the UK's top financial regulator is set to delay the next wave of bank capital reforms. It marks the latest example of a major global rulemaker abandoning its timetable for the changes until the US finalizes its packages, should I say. Sources say the Bank of England is poised to announce in the coming days that it will postpone its entire package until January 2026 at the earliest, as it monitors international developments. What have we got coming up for you? Let's talk politics again. Germany's far right looking to advance in regional elections this weekend. We're going to look at what it could mean for Olaf Scholz's coalition government. We'll do that next. This is Bloomberg.
This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space. That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Germany has an economical problem. We're not totally shrinking, but all the great times where we really had a profit because of China growing that fast and we could export almost everything made in Germany to that country or to the region, this is over.
Otto Fricker talking to us a little bit earlier on, member of the Bundestag and the budget policy spokesman for the FDP, the Free Democratic Party, joining us a little earlier to talk about kind of where Germany is economically. Let's talk about where it is politically. We're heading into a key weekend. Two political stories we are watching in Europe. In France, Emmanuel Macron's popularity ticking a little bit higher, which is strange, despite him failing to name a new prime minister. This obviously, of course, follows the snap parliamentary election in France, which has led Macron with a lot of egg on his face. Then we turn to Germany. Regional elections are going to be taking place this weekend, posing a real challenge to the ruling coalition. Let's talk more about all of this. Bloomberg's Ollie Crook joins us here in the studio. Will Horvath joining us in Paris. Ollie, let's start with you. How important are these elections?
Yeah, we're going to get into the polls a little bit, but let's just sort of set up the conversation here, because these are two states in eastern Germany where the AfD, the Alternative for Deutschland, the far-right group that we've talked about in Germany really for years, starting to gain real momentum in both of those regions. So it's in Thuringia and it's in Saxony. They are expected to win the #1 spot in Thuringia and potentially in Saxony, though the CDU has edged them out just a little bit in recent polling. I mean, some of the chapters of the AfD are designated extremist groups by the German government, and all of the other parties within Germany, the mainstream ones at very least, have refused to enter into coalition with them. Where things get sort of interesting is that there's a fly in the ointment for the AfD, and that is Sarah Wagenknecht, which is a new left-wing party that is working on many of the same platforms as the AfD on two issues, namely on immigration. They're both very anti-immigration, and also on support for Ukraine. Both of them want to see support for Ukraine dialed back, and there's been a little bit of cannibalizing of the AfD vote from this party in some of these states. Now, here's a question with Sarah Wagenknecht is, will the mainstream parties work with her? We know that they won't work with the AfD, a sentiment that was echoed by Otto Fricke a little bit earlier, but would they potentially work with her? When we look at the polling, I want to pull up Saxony in particular, not because the AfD is leading the most there. In fact, AfD is leading more in the other polling, but Saxony is a really interesting region in Germany because it is home to so much of the chip building. We talk about that TSMC plant that's coming in from Taiwan, from the chip makers. This is a region that needs people to work in those factories. You need skilled labor. You need immigration, so potentially why the CDU is coming up a little bit closer there. But as you can see, the SPD, the governing party right now, Scholz, the Greens, and the FDP, those are the three parties in coalition right now. They're not even going to get single digits in this region, Guy.
Ollie, it's going to be a fascinating weekend. How will it reverberate in Berlin? I think it's going to be really interesting to watch that story. Let's turn from Germany to France and figure out what is happening with the French political story. There are rumours that maybe we get a new prime minister announced over this weekend. We're hearing potentially Sunday night. France kind of goes back to work on Monday morning. Schools go back, etc. And that would be nice timing. Will Horvath joins us now to discuss. Will, how hard is it to handicap that Sunday night story?
It's pretty, well, I'd say it's very unclear if we'll definitely get anything on Sunday at all, because a lot of the difficulties that Macron has naming a prime minister haven't really gone away. He's still sort of in search of a perfect candidate who can, in some ways, achieve the impossible of bridging together all these sort of ideologically opposed factions in the French Parliament that have emerged from this, from the snap elections that he inflicted on himself in June. We're now I think we've beaten records for any kind of time without an actual government in France. But, you know, there's no actual deadline for Macron to come up with a new prime minister. However, there is the pressing matter of the budget, which the new government really needs to get to grips with to present by the end of September.
Is the left cracking? That seems to be what he's waiting for.
Yeah, that would be almost, you could see that as almost sort of a necessary condition to be able to have anyone who can bridge the gap between the different groups. And so there's a lot of speculation that the potential prime minister candidate would be sort of an elder of the centre-left who's kept out of the front line of all the bickering of recent months and even years. And they might stand a chance of sort of sewing together some kind of majority, or at least a majority of lawmakers who would agree not to bring down the government in a no-confidence vote.
How big a challenge is that? The numbers look fairly daunting. Even if he can kind of pull something around the centre-left, he's still going to struggle to deal with that no-confidence vote issue, isn't he?
Yeah, that's a real threat, and you know it's always been there. It's been there since 2022 when he first lost his absolute majority in Parliament. But he was pretty close to an absolute majority, and so the threat wasn't entirely there, because you know it would have required nearly all lawmakers to unite against him. But now, like, we have a Parliament that's split into 3 blocks, and some of them are very unpredictable. We don't really know how the far right is going to behave in confidence votes, and it's pretty clear that you know that some of the divisions between the far left and the centrists are so stark that they will sort of just by reflex try and vote down any government that isn't their own.
It's going to be an interesting weekend. Maybe it's going to be an interesting start to September. Oliver Crook, Will Horrobin, both of you, thank you very much indeed. We'll keep an eye on both of those stories very carefully and bring them back to you on Monday morning. Coming up, it's been a tough month for the dollar. We're going to take a look at the closest kind of rivals to it, what's been going on in the currency space. It's been a really interesting month in so many ways. We should probably digest and think about a little bit of what has happened. We'll do that next. This is Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg. Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
Welcome back. We're a little off it, but the Stock 600 this morning has hit a record high. This is the kind of the longest term chart we can go back to and look through. As you can see, we've been climbing kind of left to right. It's been interesting. Where the bumps are, I think, are really interesting in terms of obviously the 08 story. You can see COVID in there really clearly. But the rally has been fairly dramatic since then. Obviously, if you were to compare and contrast this to the to the S&P, it looks fairly diminutive, the rally that we have seen. But we have hit a fresh record high this morning. You got 464 stocks up at the moment. You got 124 down. You got 12 unchanged. Novo Nordisk, unsurprisingly, adding the most points this morning. Let's switch from equities to what is happening in the foreign exchange market. This month has been really interesting. You can figure this out on your Bloomberg quite easily. GMM is the function maybe you want to plug in. You do that, you look at what has been happening, you can pick your basket, then go to the month to date and figure out what we've seen over the last month. And you'll see that the Swedish krona has been a real performer. The Norwegian krona, the Swiss franc has been a real performer. The British pound is up by 2.5%. The dollar has been under pressure. Even the euro up by 2.4%. Still trading, though, at 108.40. We have seen some weakness over the last few days. The Swiss franc now causing concern around maybe intervention risk. Let's talk about all of this. Bloomberg's Ven Ram joins us now to discuss. Ven, what do you think? August has been bad for the dollar. Has it bottomed out?
It's approaching a bottom, Guy. I think that, what we saw in August, as you mentioned just now, is pretty curious. The currencies that have rallied the most are the New Zealand dollar and the Swedish krona. Ironically, those were the central banks that actually cut rates this month. So what is on display here is the higher beta of some of these currencies, and that higher beta will continue to be on display in the coming months if the markets are right about what is going to happen with the Fed's rate cuts. In that environment, I expect the Swedish krona in particular to perform very well, the Japanese yen and the Swiss franc to do extremely well in the coming months.
It does beg the question about whether or not we're going to see the S&B digging into its intervention playbook once again. Certainly that risk seems to be rising right now. The other thing that's really kind of caught my eye over the last month has been the fact that we've seen such big underperformance at the front end of the UK curve. So elsewhere, we've seen a really big bid coming into bond markets in the 2-year tenor. But the UK's been different. And we saw a real stark contrast between Powell and Bailey at Jackson Hole. How much more has that trade got to run, do you think?
Well, I think that, UK gilts at the front end are going to underperform in the coming months, guys, for the simple reason. If you look at the spread between the 2-year and the policy benchmark in the UK, it's the most negative since the global financial crisis. And that kind of negative spread that we are seeing is an indication of what the markets are expecting vis-a-vis the BOE's benchmark rate and its trajectory, rather. So I think that the markets have done it too much, have overrun with the idea that, look, the BOE is going to cut rates deep. Yes, the BOE has room to cut rates, particularly because it has got a real policy rate to play with. It has got a considerable buffer, like the Fed. And unlike the ECB, it's got a considerable buffer. So the BOE's rates are going to go lower, but I think they have overdone that. They've overstated that by running too much of it. They have run it up front, and therefore the markets are kind of underperforming. Yep. And that's not surprising to see.
Do you think, therefore, sterling's run out of road?
No, I think that, that's the curious dichotomy there, Guy. I think that the sterling is going to perform very well, regardless of what the BOE does. And as I mentioned earlier on, it's got to do with a higher beta. And in an environment where the US dollar is broadly weak, sterling will perform even better than the euro. And you can take my words to the bank with that.
Ven, always a pleasure. Thank you very much indeed for updating us. Bloomberg strategist Ven Ram joining us out of Dubai. It's a long weekend coming up in the United States. To set you up for that and what the session looks like going into the core PCE data a little bit later on, Mr. Manus Cranny is in New York. He's preparing for the brief. That is next. This is Bloomberg.
recent years, you created an institute, the Jane Goodall Institute, and what is that designed to do?
Well, that was started in 1977 when by then I had a little research station and 4 of my students were kidnapped and everything shut down. And so some friends of mine said, well, let's start an institute so that this research can carry on. Bless them. So that was 1977, and it was set up to study, conserve chimpanzees and other animals and educate. And it's developed since then. So it's, you know, we've got 27 Jane Goodall Institutes around the world. And then I realized at some point that the African people living in and around chimpanzee habitats right across Africa were struggling to survive. There was crippling poverty, lack of health and education, moving deeper into the forest, being exposed to diseases like Ebola and HIV from the chimpanzees and vice versa. It hit me. If we don't help these people to find ways of making a living without destroying their environment, conservation won't work.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Good morning from our global headquarters in New York. I'm Manus Cranny. It's Bloomberg Brief. Let's set your agenda. Marching on, stocks on track for a 4th straight month of gains as investors await the latest inflation data. A time of deep reflection at Intel. Chip maker Mulls splitting the business and scrapping projects to navigate through a historic slump. And Sunbelt's up for grabs. VP Harris edges over former President Trump in the swing states. More on the latest poll coming up. Breaking news for you on the euro area prices. This is about inflation in the Eurozone. 2.2% year on year. The estimate was at 2.2%. So that's on the headline. Very much in line with the estimates, bang in line on the core. 2.8 versus 2.8. I can tell you French inflation is the lowest in 3 years. German inflation dipped down to just over 2% from 2.7%. So this inflation narrative, disinflation narrative, I should say, in the Eurozone is certainly in train. There is the euro dollar at the moment, is the dollar that has had a pretty tortured month against the yen, against the euro, all the way around, 110.77. Let me just show you what's going on with the markets. Do you believe it's the roaring 20s? Torsten Slot thinks it is. The slippage yesterday was on NVIDIA, of course. It skidded by 6%, the worst day in 4 weeks. You look at it this morning, it's up 1.5%. So the narrative about whether the rest of Mag 7 can hold up and a rotation can take place. That's what Franklin Templeton are saying. I like their line. Industrials and energy don't need a moonshot to be good. And SocGen are looking at breadth. Rest of the market, bonds marching for the 4th month higher, up 1.5% on the month. Bostic, you know, again, a reticence in Raphael Bostic. We're far from the Fed's 2% inflation target. And dollar yen, keep an eye on that. We are, again, looking at Tokyo inflation, topping out estimates at 2.4%, laying the roadwork for another rate hike from the Bank of Japan. So we've had strong GDP data, a strong reading from the United States of America. Today, it is about inflation data. My guest is Callum Pickering. We're going to come back to Callum in just a few moments. And if we think about the theater of what we had yesterday. We had GDP revised higher, we had a PC, core PC coming in better than we had estimated, and jobless claims pretty reasonably in line. So the question that we need to ask ourselves today when we look at that monthly PCE is the disinflation data and how that comes through. There's the S&P 500 at the moment up 0.4%. And if we just go back to the narrative in the equity markets, again, Franklin Templeton would make this argument that there is a rotation. In other words, there was breadth to play for yesterday. You saw that revision on the GDP to 3%. And just to refresh your mind about what SocGen say, the narrow bubble trade is going to broaden and the breadth will continue. As I say, we're settling in, we're reflecting on yesterday's GDP data. We have Callum Pickering, the chief economist over at Peel Hunt, and he weighs in on the Fed writing this. To prevent the ongoing US slowdown and turning it into a genuine economic deterioration, the Fed will probably be more aggressive of the three central banks. He joins me now. Callum, what does it take to get them aggressive and punching out a 50 basis point cut in September? Good morning.
Well, good morning. I think 50 basis points would be very aggressive. You saw the latest US GDP data for Q2 revised up again. The PCE data today will show inflation above 2%. This is not an environment for a 50 basis point cut, but aggressive would probably mean 25 basis point cuts without skipping for the 3 meetings remaining this year and then probably for the first 4 of next year. My hunch is the US economy is going to start to slow pretty appreciably into Q4 and then into the first half of next year. That usually would be something that markets might fret about, but I think the combination of lower interest rates, further declines in inflation, and actually the realization that it's just a slowdown, it's not a hard landing, will be good for risk on. And my hunch is actually that risk on won't just be in the US, it will be outside of the US. Of course, with the caveat, let's see what happens with the US election. What does pretty appreciably mean and look like in a slowdown? So Q2, 3% annualized, that's a huge number. The Fed thinks the sustainable rate in the US is 1.8%. So you would expect after almost 2 years of above trend growth to see a slowdown in any case. My bet would be we'll be sub 1% annualized by the turn of the year. And the forward-looking indicators on the US by now are consistent with that. I'm paying close attention to the labor market data, not because I'm very worried about a recession, but it looks as if, at least on consumer credit for a while, US consumers have tapped out. There's very little in terms of excess savings that can be spent. So the thing that's driving US domestic demand now is employment gains and real income growth. So if employment gains really start to slow, that would show up almost immediately in consumption, and then that would show up as weakness, as broader US momentum. So if a growth drops to sub 1%, as you say, it's not going to be a shallow and short cutting cycle, is it? No, I would expect the Fed to take at least the top end of the funds rate probably to the mid-threes. My bet would be around 3.75, which is actually probably a little below the neutral interest rate in the US. We discussed this last time. I think it's around 4%. So if the Fed can get to a situation where US monetary policy is neutral or slightly easy, I don't see the sorts of excesses across the US economy that would lead me to think we're due for a genuine cyclical correction. I think what you'll probably start to see is housing pick up, business investment to pick up. You'll still see a big fiscal impulse, and that slowdown will be short-lived, and through the middle of next year, you'll start to see a stronger pickup. Of course, if you get a big surprise to the downside and you do get a technical recession, I would expect the US Fed just to slash interest rates, and then you would get a V-shaped recovery into the second half of next year. Either way, by this time next year, I think we'll be risk on. It's just what happens in the first half of the year and factoring in that election result. I know that you're one of the economists that can channel risk, the risk narrative from the data. Bonds up for 4 months in a row, record highs in global equities. Europe's at a record high. Does risk march higher and onwards? I think risk can go higher into the second half of next year, into the second half of this year, just as long as we don't get very serious downside surprises in US data. I'm a little bit nervous that the bond market is going too far. simple way to think about bond yields, on a 10-year, it's a proxy for nominal GDP growth. So US fair value is probably around 4%. That's 2% inflation and 2% US real GDP growth. You can probably go a little bit lower in line with a slowdown in the US, but by next year, once we start to anticipate a stronger recovery, bond yields will start to tick a little bit higher. And so I think we're close to fair value pretty much across the Western world, with probably 20 to 30 bips variation either side, just depending on how monthly data meters.
Yeah, various people have said they're looking a bit rich. Let's look at your tail risks. Jake Sullivan's just on the plane back from China. It looks as if all doors were open for Jake Sullivan on that trip. Biggest tail risk as you look into 2025, will it be China?
China, I think, is a manageable problem. There's a long-term slowdown in growth potential, which is due to a host of factors, not least the aging population, but also the capital misallocation, the problems in the real estate sector. But I don't expect any significant growth slowdowns. I think they can hit that 3.5% to 4% range. The big risk for me is the US election. This is an event risk horizon that markets need to pay attention to. If it's Harris, there's one set of policies that we'll have to deal with. If it's Trump, it's a very different set of policies. It's very difficult for markets to kind of draw a Venn diagram and invest in the middle. And so what we'll see is the market wait until the election, find out who wins, judge what the Congress split is, whether it's a full sweep or whether it's a split, and then try and figure out what to do from there on. I think actually for markets, Harris is going to be easier near term, but then risks will creep in over time. Whereas with Trump, I think we'll be considering what the tail risks are immediately, and then after a little while, we'll probably better adjust.
And probably search social media on a daily basis for new risks as they arise. Callum, thank you very much for being with me this morning. Callum Pickering.
My pleasure, thank you.
From Peel Hunt. Always good to have you with us. Other stories trending on your Bloomberg terminal. This is what we got for you. Chinese real estate and consumption stocks surged in trading today after Bloomberg News reported that the country is considering allowing homeowners refinance as much as $5.4 trillion in mortgages to lower the borrowing costs for millions of families. French inflation eased to the lowest level since July 2021. Cooling in the rate of price rises bolsters the case for the ECB to continue cutting interest rates after similar slowdowns in Germany and Spain. The euro area inflation, we've just broken that for you, 2.2% over the previous year. Meanwhile, the case for the Bank of Japan to buck the trend, high rates, has been strengthened after the latest Tokyo inflation print topped expectations. CPI, excluding fresh food, rose 2.4% in the Japanese capital. Coming up, Intel rising in the pre-market as the chip maker weighs the options after a historic slump. We'll bring you the details. That's next. And consumer is alive and well. Spending is shifting. That's according to Jack Janciewicz of Natixis. He catches up with me later this hour. Context Matters on Bloomberg.
Is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space. That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Morning.
This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
From Manuscrani in New York. Good morning to you. Shares of Intel are higher this morning. The chipmaker said it's exploring options to cope with the historic slump. Joining me now is Robert Lee, senior analyst for Bloomberg Intelligence. Good to have you with me. The question is, how does Pat Gelsinger stop the bleed at Intel? Because it is bleeding.
Yeah, I think Intel, for those who've covered the stock for the last 20 years or so, Intel's superbly positioned in the PC market and server market, which it dominates in terms of chip supply. However, those markets are in a very mature phase, their ex-growth. So Intel, for at least the last 15 years or so, has been trying to diversify into other markets. It tried without much success to diversify into wireless and mobile. That didn't really work. And more recently, or the last 10 years or so, it's been trying its hand at foundry. But as you know, that's a sector dominated by the Taiwanese and TSMC in particular. So the foundry business has had some top-line growth, but it's losing $7 or so billion a year. So the unconfirmed report is that they're potentially looking to spin that business out to free up capital to invest in other potential growth areas. What they may be remains to be seen, but I would guess it probably would have something to do with AI.
Yeah, I mean, all roads lead back to that. You just look at Dell's numbers. I'm going to talk about those in a moment. In terms of cutting off a finger to save the arm and the body, what is that solution? Is that scrapping some capex, scrapping some projects, or is it the bigger option, which is, let's say, splitting the company up?
Okay, that's a very interesting one. I know we're limited on time, but Intel follows a very traditional model referred to as integrated device manufacturer. Effectively, it does everything. It designs the chips, it fabricates them, it packages and tests them, and then it sells them on. Whereas you look at companies like NVIDIA, they focus solely on the design stage. Everything else is outsourced. You look at TSMC, they do the fabrication or manufacture. So the move to the outsourcing model has been something that's driven the industry within 20 years, for the last 20 years or so. Yeah. Intel, is following a very traditional model. So perhaps one way forward for them is to try and, split the business up, to focus on where their core strength is, and obviously to tap in more to growth drivers, particularly in AI.
Yeah, well, certainly Gelsinger has got some pretty tough decisions to make. Robert, thank you so much for being with me. Let's just check in on the Dell price. She's trading higher this morning. They're reporting sales that topped estimates. I mean, revenue jumped by 9% to $25 billion. Orders for their AI servers, $3.2 billion, and the market was looking for 2.6. Just looking at the analysts are saying, you have got an impressive upside from Evercore and a strong set of metrics from Barclays with an equal weight on it. Evercore are outperforming. This is Bloomberg.
I think this will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in. We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close.
Welcome to Balance of Power.
This is Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
September 10th, as Election Day approaches, Vice President Harris and former President Trump hit the stage for the first time.
Oh, we're going to beat her. I look forward to the debate.
If you've got something to say it to my face.
We'll bring you informative analysis.
Will that debate decide the outcome of this election?
It's going to come down to both policy and performance.
Tune in to Bloomberg Television for the ABC News Presidential Debate Simulcast with special coverage starting at 8 p.m. Eastern. Context changes everything.
My agenda includes what we need to do to bring down the price of groceries. For example, dealing with an issue like price gouging. What we need to do to extend the child tax credit to help young families be able to take care of their children in their most formative years. What we need to do to bring down the cost of housing.
Vice President Kamala Harris there showing her economic agenda on CNN last night. The former President Donald Trump, he has different plans if he wins.
The first thing I will do to make middle-class life dramatically more affordable is to end Kamala's war on American energy, terminate her Green New Scam, and drill a baby drill. We're going to drill, baby drill.
Well, polling carried out after last week's Democratic National Convention shows that Harris is edging ahead of her opponent in the key states that may swing the November vote. Enda Curran is with us from our team in Washington. Enda, Harris has this edge. It's in the Sun Belt states, and some of them quite considerable. What are the issues that she's pushing forward on and winning on and cutting through with?
Well, she's talking a lot, Manus, about the opportunity economy, this idea about tackling the economic issues that are hurting the middle class. And like you say, the latest Morning Consult Bloomberg News poll shows she is gaining traction in those all-important swing states. She's tied or leading in the 7 ones that everybody looks at. Arizona being tied. It looks like those Sun Belt states are up for grabs again. Nevada, Georgia. I think that even though our poll shows that voters still feel they were better off economically under former President Trump, it seems to be that Vice President Harris isn't getting the same blame for the inflation story over the past few years that President Biden was getting. She seems to be getting a little bit of a pass on that among the voter attitudes coming through in these polls. She's taking the lead in terms of being the person to look to for personal freedoms, for example. So, you know, it all points to this idea that her momentum is still there. She's still gathering pace. But these polls, you know, they've tightened, but they're still pretty tight. It doesn't suggest an outright win for either candidate just yet.
And hence the narrative from them that they are the underdogs. No Democrat has won Georgia since 2008. Economically, you are an economist at heart. So tell me, the policies that are being described by the candidates, do they make sense?
Well, I suppose on the one hand, voters have more familiarity with former President Trump's policies. He's speaking a lot about the need for lower taxes. We know that he's put a lot of emphasis on the merchandise trade story with the rest of the world, Manus, wanting a ring of tariffs on goods coming to the US, and of course taking even harsher steps on goods coming from China. So his broad outline, I think, is kind of known. Vice President Harris, the issue and the feedback from voters and analysts with her is that there needs to be more specifics. She's talking about an opportunity economy, tackling more of the issues that the middle class are facing, and some topics we've had some outlines on, which are, of course, assistance to buy a house, the assistance to bring up a young family, child tax credits, and, of course, this idea of tackling price gouging. Now, of course, there's lots of debate and discussion over what it exactly is, but that's the broad contours. Vice President Harris, she's kind of hugging the President Biden policy agenda, at least sticking to the good parts of it, but acknowledging, obviously, that a lot more needs to be done when it comes to the inflation and cost of living story. So that's a fairly tricky path for her to straddle. But there are certainly differences between both candidates. Most obvious, I think, when it comes to taxation, probably some differences in terms of foreign policy and dealing with the rest of the world when it comes to economic matters too. But for now, I think more familiarity with President Trump's, more detail needed on Vice President Harris's policy mix.
Well, we know Harris flipped on fracking. We know the Democrats have a higher tax agenda, perhaps relative to the one that Trump is putting forward. How much do we know about the detail around Trump's economic policies relative to the detail around Harris, which has been criticized as perhaps lacking?
Well, I think for former President Trump, we know it's probably a continuation of some of the themes that he's been talking about. That's deregulation. He talked about deregulating the energy sector, for example. You just heard him play that clip. He wants to have a more hawkish approach to trade. It's not clear how different Vice President Harris would be there yet, because she hasn't spoken a lot about trade policy specifically, but we know that Trump would go hard on tariffs, for example. So there are differences in taxation and trade and on regulation.
Okay, Enda, thank you so much. We'll be seeing a lot more of Enda Kern on this runway to the election. Enda Kern in Washington. Front page news, this is what are making headlines around the world. First up, more on the White House race. The New York Times reports donors to the Harris campaign are pushing her to reconsider a proposed tax on the wealthiest Americans. Investment gains on those worth more than $100 million would owe 25% tax on a combination of regular income and so-called unrealized gains. Next up, Wall Street Journal. iHeartMedia, the troubled radio and podcast broadcaster, has engaged a law firm to lead negotiations with creditors on the restructuring of $5 billion of debt. And Israel's army said it has killed 5 gunmen at the hideout in the West Bank mosque. The campaign in the West Bank kicked off on Wednesday and has been mounted in parallel to almost 11-month-old war with Hamas in Gaza. And we would like to correct a comment made by our correspondent in a report on Monday on the ceasefire talks between Hamas and Israel. In referring to the outcome of the talks, she referred to the release of Palestinian political prisoners. Prisoners are being held and may not necessarily be for political reasons and may be operatives in the conflict. Okay, on markets, we're cutting down. We'll have Mike McKee around the desk. We're going to bring you some more inflation data today. University of Michigan sentiment, that's going to be critically important. Stocks are a little bit better bid this morning. We just had Callum Pickering there talking about the propensity for a little bit more action from the Fed than perhaps the market is anticipating, but still going for a soft landing. Nvidia was the skid yesterday. The dollar has had a brutal month against all G10 currencies. Flat this morning, 12.31 is where we are. And Callum Pickering, Peel Hunt, saying he thinks fair value on 10s is around 4%, a little bit rich in this zone at around 385. Coming up, we'll have a conversation with Jack Jancevitz of Natixis on why spending is shifting, not falling off a cliff. Context matters every day on Bloomberg. Good morning.
also an owner, I should have pointed out, of 3 major sports teams.
That's right.
Right? And you're the first woman, as I understand it, the first woman to own 3 major, have stake in 3 major sports teams. Is that right?
Yes, and we'll say African American.
You were approached by the owner then of the, I guess, the Washington Wizards and the Washington Caps about maybe buying the Washington Mystics, which is the women's basketball team. And what did you say?
Well, first of all, it was Abe Pollin. He did come to me and Susan O'Malley, and they said, Abe Pollin says, look, I want you to be the face of the Washington Mystics. And I said, what do you mean be the face of? He says, I want you to buy this team. His health was failing. And I have to tell you, and a lot of women can understand this, we never get these opportunities. So that was the first thing that struck me, and I was flattered. I was really flattered. I said, well, Abe, what are the financials on this? And he handed them to me. He says, well, they're not making money. But I was still intrigued about team ownership.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
You're watching the close.
Welcome to Balance of Power.
This is Bloomberg. Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
From our global headquarters in New York, welcome to Bloomberg Brief. I'm Menace Cranny. Let's set your agenda. Marching on, stocks track higher for the 4th straight month. Gains as investors await the latest inflation data. A time of deep reflection at Intel. The chip maker mulls splitting the business and scrapping projects to navigate through the historic slump. And Sunbelt up for grabs. VP Harris edges over President Trump in the swing states. More on the latest poll right here on Bloomberg. So these equities globally are marching higher for the 4th straight month. A little bit of a wobble yesterday in NVIDIA, down 6%. I mean, more than a wobble, it was a skid. The worst day in 4 weeks. But the overall trajectory of the Mag 7 remained firm. Rotation is the name of the game, according to Franklin Templeton. We're seeing this broadening out in the reach, and SocGen concur with that, which is we're moving from this narrow bubble trade to a broader breadth. And continuing there. Bonds, 385. Callum Pickering just with me there a short time ago from Peel Hunt saying we really are fair value at around 4%, and this looks a little bit rich. 4 months of gains, by the way, in the bond market, up 1.5% this month. Longest run of gains since 2021. Is it exhausted? We've got more data today. Bostic says that inflation remains far from the Fed's 2%. So again, just a hint of caution from Bostic. Dollar yen, keep an eye on it. And again, the dollar has had a pretty tortured soul time against the yen this month, down 3.5%, the yen rising by 3.5%, and those inflation expectations in Tokyo topping the estimates, and that lays the groundwork for another hike, potentially from the Bank of Japan in the autumn. As I say, we're closing out the week, again, with another slew of economic data today. What are we going to get? Core PCE, along with personal income spending at 8:30, Chicago PMI at 9:45, and University of Michigan consumer sentiment at 10 a.m. Everything you wanted to fill your bond bucket with. Mike McKee is with me around the desk. So, Mike, good morning to you. Good to see you. Again, this market is wholly obsessed about job data, perhaps a little bit less so than inflation data. Or if you look at the Doves, they're looking at the job data, not so much the inflation data. Set the table for me today.
Well, a week ago today, I was at the center of the universe because it was all about Jim Powell. And then the rest of the week, all I've heard about is NVIDIA. Now we finally get back in the game on the econ side. And it is an important but not decisive inflation number that's coming out today. The PCE index, personal consumption expenditures, and that's what the Fed uses to decide on its 2% target, whether they're meeting it or not. And they're not going to be meeting it today. Expectations are for a slight rise in the headline number, and the core will go down a little bit, but there are some who think that we may see both decline. We'll see, but it isn't going to tell you that we're at 2%. Raphael Bostic has a point there. Incomes up 0.2%. I'll get to that in just a second, but spending is what's going to be really interesting. Yesterday's GDP number suggested spending was strong in July, and the forecast that we have for the month is up 0.5%, which would be a significant increase over the last couple of months, and it's a trend that seems to be in place that Americans are continuing to spend. The question is, what are they spending? We've been hearing for such a long time about the idea that they've spent down all their pandemic savings, and there is some fear that the overall savings rate will hit a low for like the last 15 years. If that's the case, then can people keep spending? That's why it'll be important to see if wages and salaries are still going up in the incomes portion.
I suppose when you have a job and you have wages, that perpetuates the spending. But what is it that puts a floor under that spending? Is it home equity?
It could be home equity, but not for everybody, because there are not that many people who can refinance, given the fact that people's refinancing was done for years and years and years when we were in the very low ranges, and we haven't been very high. We've been very high. So until we get down more, it's not going to help a huge amount.
Okay, Mike, let's see what the data brings us. I know we've got University of Michigan as well in the inflation expectations. Obviously, the re-anchoring of those. As you said, you were at the center of the universe last week. We'll take you back to the center of the universe later today with the data. Mike will be with the surveillance team. My guest this morning is Jack Jancowicz of Natixis, and he writes this: the Powell put is back, and this strike price is rising. It has always been a put on a labor market conditions, not equity market prices, and that remains true. Jack, good morning to you. Mike and I just talking about the consumer there, but this Powell put on the labor market, what is it that triggers a deeper series of cuts in this job market? How bad does it have to get to deliver fast and furious cuts? Good morning.
Good morning, and thanks for having me on. You know, I think it all comes back down to that employment side of the dual mandate from the Fed. I think the Fed basically came out and told us at the last meeting here that, you know, inflation was moving comfortably towards the 2% target, and now the risk was coming on the employment side, which is full employment. So paying attention to the unemployment rate, we still have a couple more jobs prints between now and that first September cut. And I think if we get a market deceleration in that payroll number, you might see the potential for that 50 basis point cut increasing. But I think for now, we're still in the camp that you're going to get a series of consecutive 25 basis point cuts.
Mike and I were just talking about the consumer. That's where our conversation finished off. You have faith in the consumer, although I would challenge that and say you've got a bifurcation in the consumer.
And I completely agree with both of those comments there. You know, you made the comment earlier, simply if we have a job, you're earning a real wage and inflation's falling, so real wages are on the rise in your working hours, you're going to have a comfortable income. And what do we do in the United States here? We're pretty good at spending that income. So, you know, from that perspective, the consumer is certainly supportive, but we are certainly seeing different echelons of that consumer income basket starting to get pinched. And more specifically, that lower basket's really, I think, starting to get pinched a bit.
Look, one of the things that I am tracking is the release from home equity. As Mike said, look, man, it's not everybody has a home and not everybody can tap a home equity line, but it's up 20% since 2021. How much of a pillar of strength is that for the upper end of the consumer?
Yeah, I think that certainly comes into play here. If you think about where housing prices have gone over the last couple of years, you know, we're certainly pushing at all-time highs, which means there's certainly plenty of equity to tap into. But again, some of the numbers that we've seen, it's on the rise. With that sort of capacity utilization, if you will, there's still a big buffer there. So to us, that tells us, yeah, we're at the early stages of that being tapped, but still plenty of other areas there which they can draw from, which could continue to support big ticket consumption going forward.
And look, this is an economy which is robust. Look at the GDP revision yesterday. Look at the jobless numbers. This is not an economy at the moment that looks as if it's going to crash or have any kind of a hard landing, is it? It's the jobless claims and the NFP that are going to be the absolute bell ringers here.
Yeah, and if you look at those GDP revisions from yesterday, you know, the parts that we want to look at, that we want to see strength, those are basically all revised higher. And those real final private domestic sales, that's the key for us, because it basically strips out exports, it strips out the impact from inventory restocking and government spending. That was revised higher. That tends to be a pretty good indicator of upcoming economic momentum. And that's still pointing close to 3%, which means, the economy is still doing very good in here. And I think that's expected to continue.
And those banks are flying higher on that as well, aren't they? Credit spreads remain well behaved. The bank market is on fire. And this is all part of the risk-on narrative.
And I think the other thing that we're hearing from some of the pushback we're getting, you're seeing a little bit more of the rotation in the marketplace. And defenses have been doing a little bit better, but when we look at other places within the market, like you just mentioned, credit spreads, they actually are continuing to drift back towards the recent tights. You look at financials performing a little bit better than the broader market. So, even though the narrative might be shifting towards a broader participation with defenses picking up, I'm not necessarily sure that that's a bad thing. We're not seeing any sort of, I think, concerns coming out of the credit markets, and that's telling us quite a bit that things are still in good shape.
Look, we have moments of existential angst, like NVIDIA yesterday, down 6%, worst day in 4 weeks. But then I look at commentary from other houses. Industrials and energy don't need moonshots to really sustain. So are you a believer in the breadth? A lot of people have talked about that to me.
Sure, and I think the key for us was, one, confidence that the cutting cycle would be commencing, and I think we certainly got the green light from Powell on that at the last meeting. I think the other one is simply going to be, are we getting a more of a growth slowdown or an actual recession, a soft patch recession? We're in the camp that this is a soft patch. Starting points matter. We're slowing from an extremely higher level. And when we start to slow, we're basically slowing back to a long-term trend. And I think once there's confidence that we're not going to be slipping into the recession here, I think you're going to continue to see that breadth widening out, probably more aggressively.
Where would you be inclined to look at bond markets, 385, 4 months of a rally, day after day, people come on the show and they say it's looking rich, but it's also a decent hedge, isn't it?
Yeah, and that's the good thing that we're seeing. I think from a fair value perspective, we think right around 385 for the 10-year is probably about what we would consider to be priced properly. So we're basically at that level here. But, when we start to think about that correlation, that equity risk offset in the traditional 60-40 portfolio, we're finally starting to see that inverse correlation coming back into play. And so from your perspective, that inverse correlation is certainly going to give you that equity risk offset, as well as throwing off some yield at the same time. So the fixed income portfolio back in terms of what it normally had done from a historical perspective, and that's a good thing for investors.
Yeah, and that 60-40 portfolio, we've seen it, come back from the dead and perform pretty amazing records recently. There you go. Jack, thank you so much for being with us. Jack Jancevitz of Natixis. Coming up, Intel pushing higher. It's weighing the options, including splitting the business up. Context Matters from Bloomberg. Good morning.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. Names in global leadership are on Bloomberg.
We are 40 million. We're a big country, and we really depend on the aid from the world. And we depend on the aid and the position and the stance of the US. So I would like to understand, what would it mean to finish war fast? If Trump knows how to end this war, he should tell us today. Because if there are risks to Ukraine's independence, if there are risks that we will lose the statehood, we want to be prepared for this. We want to understand whether in November we will have the powerful support of the US or we'll be all alone. Only our lives are at stake here, and nobody can just trade our lives.
Nobody covers the top global leaders like Bloomberg Television and Radio. Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry. And
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
Here's Bloomberg Brief. I'm Manus Cranny in New York. Intel stock is gaining pre-market. The chip maker is said to be exploring options to navigate probably the most difficult time in the firm's history. What is the option for Pat Gelsinger? Robert Lee is senior analyst for Bloomberg Intelligence. Robert, look, Intel is in a really tricky spot. They had a brutal reporting day a few weeks ago. Gelsinger's under pressure. What are the strategic options, the best ones?
Okay, well, Intel follows a very traditional model within the semiconductor industry, referred to as IDM, or integrated device manufacturer. Does everything from designing the chips, from fabricating the chips, from packaging and testing them, and then distributing them. Well, that's a very cost-heavy model, as you can imagine. You compare and contrast with like NVIDIA, who solely specialize in design, or TSMC in Taiwan, who solely specialize in fabrication. So I think as a cost of maintaining this very broad-based model increase, it makes sense to look at ways to free up cost and free up capital so they can maybe invest in other areas. Their second challenge is, you know, they're very dominant in the server and PC markets, but those are very mature. They're not growing, or not growing at a considerable rate. So again, to try and relieve some of the cost burden, maybe potentially spin off the foundry business, which is loss-making, could free up capital to invest in higher growth areas, particularly AI, to state the obvious.
Yeah, to state the obvious. Is it that just Gelsinger chose the wrong horse to back? I mean, he is his own biggest customer in the foundry business. They've never really managed to reach scale. Is it just because it's so competitive?
Yeah, I mean, for those with a long enough memory, Intel has tried to diversify into other markets for the best part of 20 years. They made a major effort to move into mobile phones. That didn't really pay off for them, 15, 20 years ago. They tried to push into foundry as well, but as I've said, and we all know, that's dominated by the Taiwanese and TSMC. Intel was, until several years ago, the technology leader in the industry, but again, unfortunately for them, they've been overtaken by TSMC, and as we've seen from the hundreds of dollars that one single piece of equipment costs from ASML, it's an extremely capitally intensive and expensive business to maintain. So I think, Intel is thinly stretched. It's got great IP, it's got great engineers, but it needs to decide where it can add most value add and generate the best return and profit for investors. So potentially splitting up the business is one option for them, because trying to maintain this integrated model is, again, increasingly expensive. Just one brief number for you. Intel's headcount, as at the end of last year, was more than the combined headcount of TSMC and NVIDIA together. Wow. So again, it's a very cost-intensive model, which perhaps doesn't make the most sense, looking forward and in the current operating environment, which is why they announced a 15% reduction in their headcount earlier this month.
Here's the single question. Let's just finish off with this. Do you think that there's going to be an appetite if he puts the foundry business on the block or up for sale? Do you think there'd be avid buyers?
That is a really good question. You look around the world, areas like Singapore have tried over a longer period of time to make it in foundry without any huge success. You've got many of the Gulf states, again, with big ambitions in semiconductor and AI. So, as they say, everything has a price. Whether there is a willing buyer in those areas or from those areas remains to be seen. But I mean, semiconductors dominates the conversation across the board these days, doesn't it? Everything ultimately in the world we live in relies on chips. So again, there is still good IP there. They may not be ranked #1, but they're still one of the leading players globally. At the right price, I think there would be demand for that foundry business, yes.
Okay. Robert, let's see what the strategy options that he lays out. He certainly admitted at the Deutsche Bank conference that it had been a tough couple of weeks. Robert Lee there. On the Intel story, let's turn our attention back to Washington. We are 66 days away from the U.S. general election. Vice President Kamala Harris joined Tim Walz in an interview on CNN. Let's take a listen.
My agenda includes what we need to do to bring down the price of groceries. For example, dealing with an issue like price gouging. What we need to do to extend the child tax credit to help young families be able to take care of their children in their most formative years. What we need to do to bring down the cost of housing.
Meanwhile, former President Donald Trump has a different focus if he wins.
The first thing I will do to make middle-class life dramatically more affordable is to end Kamala's war on American energy, terminate her Green New Scam, and drill, baby drill. We're going to drill, baby drill.
Well, the latest Bloomberg Morning Consult poll shows that Harris is edging her Republican rival in swing states, maintaining the momentum after the DNC. Excuse me. Andy Curran joins me to go through this poll. And look, this is a progression of the halo effect. And these sun states, as they are known from Georgia and North Carolina, they are very much in play, and she is making progress.
Yes, it does seem Vice President Harris' momentum is continuing. Manus, the poll shows that she's now tied or leading in 7 of these all-important famous swing states. The likes of Nevada and Georgia back in play. They had seemed out of reach when President Biden was the candidate. Arizona still tied with former President Trump. But it speaks to the idea that Vice President Harris' message is cutting through. Interestingly, in our poll, voters suggest that they still feel they were better off economically under President Trump. But nonetheless, Vice President Harris has narrowed that lead. She doesn't seem to be getting the same blame that President Biden was getting for the inflation story here over the past couple of years. So she's getting a bit of a pass on that side of things. She's also looked to more favorably on issues like personal freedom, for example. So by all accounts, it does suggest she's cutting through. And these polls, however, it should be said, are still pretty tight. Some are within the margin of error. It doesn't really give a clear lead to either candidate. But it certainly suggests that the race is tight. It shows that the economy is at the centre of it, and Vice President Harris has made some inroads into former President Trump's lead on that side of things.
We're getting indications on their economic agenda, both sides. One is on tax, one is on housing, a change in direction from Harris on fracking. As you look at the economic agenda, what sense do you make of that?
Well, I think former President Trump's agenda is probably broadly known. That is, it's deregulation, as he just spoke about there, on the energy front, for example. It's about bringing down taxes, extending those tax cuts that are due to expire next year. It's a fairly aggressive approach on the merchandise trade front with the rest of the world through the form of tariffs, in particular, of course, with China. So we kind of know the contours there. Vice President Harris has made some detail in terms of what she would tackle. She's talking about the opportunity economy, tackling middle-class issues, and that is, as you mentioned, this idea of going after price gougers, offering help for home buyers, offering tax credits, child tax credits for families. The issue, though, is, a lot of analysts are making the point that these are light on details, light on specifics. In the interview last night on CNN, there was again some commentary around, tackling these issues that are impacting the middle class, but it wasn't very heavy on detail, and that's what a lot of people are looking to. Vice President Harris is trying to hug the Biden agenda on the one hand, the successful parts of it, which has clearly been a very strong recovery over the past few years, but of course she's also acknowledging that on the inflation front, for example, a lot more needs to be done. So it's a pretty tricky path that she's trying to navigate there.
She is, and I mean, some of the differentials, you just heard former President Trump talking about drill, baby drill. Kamala Harris obviously changes her view on fracking. When it comes to the economic policies of Trump, obviously his narrative is about lower taxation and at the same time going after the middle class. On his economic policies that you've seen or that you've heard from, what do you make of those?
Well, by all accounts, they are cutting through because voters, according to our own polls, still feel they were better off under President Trump's administration. That, of course, was because it more or less predated the big inflation outbreak over the past few years. And again, he's promising another agenda of lower taxes for both workers, households, and for businesses. And of course, he's talking about bringing down regulation, the cost of doing business, and rejigging manufacturing here and taking a more aggressive approach to doing trade with the rest of the world. So there are a lot of messages and populist strains in that clearly resonate with the broader voter base. And this is why Vice President Harris, too, has moved on some of these areas. For example, she's matched his pledge, no tax on tips, for instance. You mentioned the fracking ban. Vice President Harris has moved into some of these areas as well. We don't quite know specifics of where she is on the trade story yet when it comes to tariffs. She has talked about President Trump promising a tax on consumers, maybe hinting a different approach there. But clearly there are differences between both, but there are areas where both are also sharing commonality to try and share that populist message to the voters.
Enda, thank you very much. We'll see a lot more of you between now and the run-up to this election. That's Enda Curran on the various polls and economic narratives. Coming up, big day for economic data. I'll run you through the very definition of a calendar right here on Bloomberg.
Our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have Take-Two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space. That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Slew of economic data is to hit the tape today. This is how the rest of your agenda looks. 8:30 a.m. it is about the PCE, the core PCE and personal income numbers. Then you've got the Chicago PMIs at 9:45 a little bit later, and UMISH sentiment numbers along with the inflation outlook for 1 year and 5 year. Some micro movers to keep an eye on through the day. Dell, as we've been saying, the gains there as the results came through. Strong AI demand for servers there. Sales topping estimates. Marvel Technology, you've got, again, a nice bid there. Higher as AI demand fuels their earnings growth. And then Ultra Beauty, that dips. The retailer cuts its sales outlook, slowing consumer demand. Price target lowered by Piper Sandler and Canaccord. The bond market had a little bit of a pop yesterday as you saw that revision in the GDP and some strong consumer data. What you're looking at here is the past 5 days. And Bank of America talk about the flows into bonds. Let's see, the data could shift the dial.
Well, I think what's happening is we're starting to bring realism into the discussion. I mean, I think understanding the global energy system, the scale of that system, the important role that it plays in everybody's life around the world, and then thinking something that's been built over 150 years, trillions and trillions of dollars of investment that's playing such a critical role in the economies around the world, how you transition out of that system. And I would say transition from a higher carbon emission system to a lower carbon emission system. We started out with a very narrow solution set focused on wind and solar and EVs, and assumed or aspired that that would address the total set of the issues, and it doesn't. We need to be more realistic around, to Patrick's point, there are a lot of solutions that are going to be required. We should stay focused on the problem statement, which is emissions, and reducing those emissions, and less focused on exactly how to achieve that, and let every company, every sector, all technologies compete for the most cost-efficient way to reduce those emissions, and we will make progress much faster, which will mean making today's system more emissions efficient while we introduce new systems that have lower emissions. And then with time, you will transition and we'll make progress.
We are in a fairly sweet spot that's been priced decently into the market.
This is an environment where you have to look at the fundamentals.
I think investors should go into a more diversified, multi-sector approach.
This market is driven by fundamentals, and it's not a gimmicky rally.
We're still having the mother of all debates between the bulls and the bears.
This is Bloomberg Surveillance with Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern.
Let's get you to a long weekend. Live from New York City this morning. Good morning for our audience worldwide. Bloomberg Surveillance starts right now. Coming into Friday, looking to close out the last week of August on a 4-month winning streak on the S&P 500. Equity futures look like this. Your scores shaping up as follows. Up 0.4 on the S&P, up 7 on the NASDAQ. On the Russell, the small caps up by 0.5. Your day ahead shapes up as follows. Kicks off at about 8:30 Eastern time. Lots of data for you. Personal income and spending, core PCE, and then Lisa later on, 10 a.m. Eastern time. You, Mitch, consumer sentiment.
This week actually was fascinating from one perspective, which is that, I know you're laughing. I mean, a lot of perspectives it wasn't, but this one it was. Essentially, you saw the Magnificent Seven holding back this S&P from reaching new all-time highs. To me, that is what's most interesting. People leaning into the soft landing story that much more, even with some hiccups, at least marginally, from some of the biggest contributors to the gain so far this year. This, to me, screams of just soft landing nirvana. We've been talking about that, and this full faith in the Fed chair, Jay Powell, being able to cut rates without that weakness that most of the time happens in tandem.
For many parts of this equity market, good news is good news. Better growth data, firmer GDP, jobless claims contained, equal weight, another all-time high. The Russell of small caps outperforming. Can that continue? Let's talk about the consumer. The quote of the last 24 hours, the Dollar General CEO on low-income shoppers. Take a listen to this for a quote. Inflation has continued to negatively impact these households, with more than 60% claiming they have had to sacrifice on purchasing basic necessities. So the labor market says things are okay. Some of the commentary coming from some of these consumer-facing companies still pretty dire.
I'm really happy that you went there. To me, that was my takeaway from yesterday. The fly in the ointment was Dollar General shares down something like 30%, a record decline after they reduced their outlook, saying that lower-income American households are running out of money at the end of every month. This is the area that gets hit hardest, and they are feeling the pain. Are we missing it? And I think that that's sort of the anxiety that people have, and the reason why there was such a relief rally on jobless claims yesterday that came in line. There is a feeling maybe we're missing something. We have had this many rate hikes that we are seeing signs of discretion on the margins. Is this truly a painless disinflation?
The word of the quarter, I think, for these earnings, contradictory. If you listen to the likes of Dollar General, things aren't great. Best Buy, things are okay. Home Depot, not great. Walmart, things are all right. And that's been the problem, I think, over the last month or so, hearing from these companies. There's some fuel for the bulls, there's some fuel for the bears, but there's not much clarity on what's happening here.
There's a question about idiosyncratic, and that's what I was thinking as I was reading about Dollar General. They talk about increase in shrink, which basically is another word for theft. They talk about how their customers are the first to be negatively affected by deteriorating economic conditions. And then you see other stores that are similarly positioned that are doing just fine. It's a question of, is it strategy and a consolidation in the strongest players, or is this true signs of weakness? And it is very difficult to get a handle on that.
I loved how you just tried to describe this week as fascinating. Good attempt, Ramo. Nice try.
I'm trying, you know.
Those quiet summer weeks we've all been waiting for, right?
Okay, there were some fascinating moments. I think that the fact that you're seeing the S&P 1% away from all-time highs, even though the Magnificent Seven is almost 12% away from their record highs, to me, that's interesting. I think it's interesting that we've seen, you know, such a long streak of wins for bonds. I think that it's interesting that there has been this embrace of soft landing, even with the Dollar Generals of the world raising some issues for it. So, yeah, there was some fascinating moments.
In a word, fascinating. From New York City this morning. Good morning. Welcome to the program. If you're just tuning in, you haven't missed much over the last few days. Equity futures on the S&P 500 up by 0.4%, heading towards 4 months of gains on the S&P 500 and 4 months of declines on 2-year yields. And Lisa, I think equities and bonds speaking to each other on that front.
Yeah, longest streak of bond gains going back to 2021, and this comes with disinflation without a sign of deteriorating more generally in the economy. I think it's interesting. In Europe, we're seeing inflation come in below expectations, dropping to the lowest levels since the beginning of the pandemic. At what point is this the global immaculate disinflation, or are we seeing something else? Is it sort of in tandem that we can see risk assets rally in tandem with this idea of lower rates? I'm just struggling with that.
Dial 1-800 Frankfurt or Berlin.
Yeah.
And you'll get a very different answer.
Correct.
Nothing immaculate about it.
Yeah.
Pretty dire stuff.
Exactly. And so then why don't you just cut rates more significantly? And then there seems to be more reticence on the ECB with Isabel Schnabel. And just sort of this interesting dichotomy right now between the U.S. and Europe.
The euro, 110.83. Coming up this hour, Jonathan Stubbs of Berenberg on why we might have another bubble in the making. Tobin Marcus of Wolf Research following Kamala Harris's first campaign interview, and Claudia Sahm of New Century Advisors ahead of another read on inflation. We begin with our top story. Stocks edging higher going into this morning's economic data. Jonathan Stubbs of Berenberg has a warning for the bulls, writing U.S. price sales multiples are back to 2000 peak levels. On this measure, it looks like we have another bubble in the making. Jonathan Stubbs of Berenberg joins us now for more. Jonathan, do we have another bubble in the makings? And if so, where is it and what are you advocating for?
Yeah, I mean, we've seen many bubbles in many asset classes over many hundreds of years, and in equity, 50 years, we've seen bubbles clearly. The point we were making in our recent note is that you take a reasonable measure like price to sales, and at a market level, the S&P is not quite back to its sort of peak 2000 levels. We're at a sort of 6 times price to sales against sort of 7 and change in 2000. But if you take the largest 10 stocks, we're back above sort of 10 times on a price to sales basis, having incidentally been 4 times at the recent sort of 2022 lows. So we've gone from 4 to 10 in the blink of an eye, and we're at and just above those 2000 levels. So valuation is giving investors a bit of a sort of sign of caution, just to sort of mind your eye and not just chase this blindly. That's our big point at this stage.
What do you think of the setup now compared to the setup going into August 2nd, the setup now going into September 6th? Going into the jobs report of August 2nd, we were in and around 5,500 on the S&P 500. We're actually above where we were going into that number, Jonathan. I just wonder from your perspective whether we are just as vulnerable this time around as we were a month ago.
Well, there's a couple of things. I mean, if you go back to the highs in July and run the market through to today, we've seen some big change in leadership that you were talking about at the top of the program. We've seen leadership away from the US. So in dollar terms, Europe's +5, US is still sort of 5% off its highs. In sector terms, tech's given up, a short 10%. Financials and defensives are +10 from those July highs. So we've seen this rotation. I think the dollar's a big part of it. Dollar weakness has supported that rotation. And when you look at sort of some of the metrics we look at, some of the signals we look at, where we are now, given how aggressively and quickly markets have sort of bounced back from those sort of August lows, which seemed like they almost didn't happen. Some of the signals we look at show that we should again not be sort of chasing this market too hard at this point. One of the key ones we look at is a relationship between liquidity and equity. We put a note out in July saying that was stretched and suggested caution. Markets sold off from that point, but we're back to the same point now. So we're looking at markets, hopefully rationally, but the signals are telling us not to be aggressive at this point and to exercise a bit of balance and caution.
There's a pretty big difference between exercising caution and a bubble warning that's going to mean some massive decline going forward. Where do you fall on that distinction in terms of just trying to be generally cautious and invest just with more of a sense of defensives versus wholesale go to cash?
Yeah, I mean, last time we sort of rang a bell was early January 2022. We wrote 2 reports called Crash Protection, and there we were talking about the pins that might burst what was a very inflated equity bubble in terms of valuation. That's very obvious when we look back. So it's a case of when you see valuations in this territory, and it's very US-centric, remember, because European, UK equities, rest of world equities look much more reasonable in terms of valuation. So there's more protection there. But from a US perspective, where are the potential pins? And the potential pins are around the debt burden, but it's hard to sort of know whether that pin is now, in a year's time, in 5 years' time. It's around geopolitical dynamics again. Trying to sort of pinpoint the exact date of when you might get risk activated is very, very challenging. So the whole sort of challenge here for investors is not sort of running away just because of valuation data point, but exercising a bit more caution in portfolio construction. For example, US defensives, the block of defensives, are trading close to their record valuation lows going back 50 years against the rest of the market, and are trading at valuation levels relative to tech where historically they've performed strongly. So if you've done well by owning US tech, for example, maybe it's taking a bit of weight out of that and putting it into sort of cheaper parts of the market to provide more protection into a time when markets look pretty fully valued.
Can you elaborate on that, especially when you talk about don't chase this? Is this the general index going up? Is this the rotation into riskier assets? Is this the increase that we've seen in valuations for big tech?
Yeah, so I mean, there are various levels. We call this active hedging. It's one of our sort of cornerstones of how we think investors should approach all allocation, from asset allocation to equity construction right now. And if we take the overall US market, for the US equity market to deliver double-digit returns over the next 12 months, we kind of need sort of 15% earnings growth and a bull market multiple. That's above what consensus is expecting into a slowing US economy. So it doesn't mean we can't get that reasonable return from US shares over 12 months, but the hurdle's reasonably high, and therefore we go into the market and we say, well, okay, we quite like looking at growth at a reasonable price, or we quite like sort of buyback momentum strategies. We quite like looking at cheaper parts of the market which might be unfairly valued there, might benefit from lower rates or a weaker dollar. It's about, I think, sort of rebalancing portfolios at this point. It's not about sort of wholesale selling the market, but we do have some sort of caution signals as we've gone through already. But it's about sort of repositioning near term, also into an active risk period with the US election, with geopolitical risk very sort of alive in various parts of the world. So we don't think this is the point to sort of chase risk per se, chase tech per se. Broadening out, more balance, more protection at this point in time as we run into year end.
Jonathan, you mentioned the elections. Can we finish on that? We'll have a deeper conversation in just a moment on this programme about an interview with the Vice President conducted just yesterday. To have the corporate tax rate come back up to close to 30%, 28%, to have a policy where we start to think about taxing unrealised gains in this country for very wealthy individuals, granted, how much of an impact could that have on this equity market?
Well, corporates the world over have benefited over 40 years from lower funding rates, lower tax rates, increased global trade, and all of these are sort of changing and sort of have changed in recent years. And corporate taxation is maybe the last sort of shoe to drop here. So these have all been sort of really significant tailwinds for corporate margins. And whether it's in the UK or the US, where there's obviously a sort of a two-way pull between the sort of different candidates, it seems that US corporate taxes are heading higher. One of the interesting points here is some of the companies with the lowest effective corporate tax rates over the last few years have been tech companies and big tech companies in particular. So if we are seeing in the US that sort of return to sort of higher taxation rates, which has been a big sort of boost over the last sort of 6-7 years, it's got to put a sort of net negative or a net headwind into play for the US if at the same time it's into a softer dollar, historically that's broader leadership around the world, which is moving away from what we've had over the last 5, 10, 15 years, which is essentially sort of US-only leadership. I think that's quite a likely path that we take, this broadening out from a regional perspective.
I think we've had another all-time high in Germany. The equity benchmark in Frankfurt on the DAX. Yeah, Jonathan, thank you. Jonathan Stubbs there of Berenberg on the path ahead and some difficulties maybe stateside in the next few months.
Yeah, especially with the potential tax changes that could come. Of course, our next guest is going to tell us why none of the policies actually matter. We're all focused on policy, but he says, actually, it doesn't really matter because nothing's actually going to get done given the makeup of Congress. So this maybe is one of the reasons why people are okay with a vibe-type campaign.
That's the assumption. Given the makeup of Congress, if we actually get divided government. Had a few guests on this program, including one from UBS, who said the market negative things that the former President Donald Trump would like, he doesn't need Congress for. Tariffs. The market negative things that the current Vice President would like, does need Congress for. And if you get a divided Congress, yeah, sure, we can ignore it. But who's to say we're going to get that based on the momentum we've seen over the last few weeks?
It's exactly the point that I'm hoping to talk about with Tobin Marcus, because essentially at a certain point, if you expect that this momentum is partly to help the down ballot races, well, at what point do you put a higher premium on a unified Congress with the party of the president?
That conversation just around the corner. Let's get you an update on stories elsewhere this morning. Here is your Bloomberg Brief. ECB board member Isabel Schnabel saying the central bank should avoid cutting interest rates too quickly. Schnabel pointing to lingering services inflation that could hold back progress towards the central bank's 2% target. Traders are pricing in 2 to 3 more ECB rate cuts this year. China considering allowing homeowners to refinance as much as $5.4 trillion in mortgages. The plan is designed to lower borrowing costs for millions of families and boost consumer spending. Sources say homeowners would be able to renegotiate their terms before January, when banks typically reprice mortgages. And finally, NVIDIA said to be discussing joining a funding round for OpenAI that could value the AI startup at over $100 billion. Sources saying Apple and Microsoft have also been involved in talks about participating. More on that story a little bit later in the next hour. Up next on this program, plenty of talk, few specifics.
Day one, it's going to be about, one, implementing my plan for what I call an opportunity economy. I've already laid out a number of proposals in that regard, which include what we're going to do to bring down the cost of everyday goods.
Your long economic nightmare will very soon be over.
A conversation just around the corner. Live from New York this morning. Good morning.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
live from New York City. Welcome to the program. Equity futures on the S&P 500 positive by 0.4%. Looking to bounce back. Strange session yesterday. Data was decent. Equity market rallied. We were ignoring what was happening with NVIDIA, and then it just all faded, Lisa, going into the close.
Yeah, and again, though, as scintillating as this week was, who knows exactly who was around to actually be doing that. Maybe it was just that, the algos ran out of energy. This is the issue to me. How much can you sustain the ongoing rally and the broadening out with that lifting all boats at the same time that you are seeing some ongoing questions about just the strength of the economy? That's my question.
Different person to the person we spoke to 18 minutes ago. Bramo said this week was fascinating. Now you sound incredibly cynical about the price action of the last 12 hours.
I think when you take a step back, come on, just leave me alone. It's been a long week.
Let's get Lisa to the weekend. Under surveillance this morning, plenty of talk, few specifics.
Day one, it's going to be about, one, implementing my plan for what I call an opportunity economy. I've already laid out a number of proposals in that regard, which include what we're going to do to bring down the cost of everyday goods, what we're going to do to invest in America's small businesses, what we're going to do to invest in families.
I'm here today with a simple message for the American auto worker and for the American worker. Your long economic nightmare will very soon be over.
So here's the Lotus. Vice President Kamala Harris pledging to address economic woes and bolster the middle class, but offering few specifics in her first interview since becoming the Democratic nominee. Tobin Marcus of Wolf Research writing, "We did not expect meaningful policy news out of this interview. And sure enough, we didn't see anything that should concretely shift investor expectations for the policy outlook if Harris wins." Tobin joins us now for more. Tobin, just walk us through things then. Take a big step back. What stood out for you?
I think basically she did what she needed to do in this interview. I think on the one hand, some of the elements of the performance were a reminder that she does have significant vulnerabilities as a candidate, despite the fact that things have been going fairly well for her so far. I think that the most challenging part of what we saw yesterday was her attempt to account for the shifts in her policy positions from the very liberal stances that she was taking in the Democratic primary in 2019 to the aggressive move to the center that she's made at the top of the ticket over the course of the past 5 weeks. I think it was not terribly surprising that we didn't see compelling accounts of where those shifts came from, because ultimately, I think this is motivated by political considerations. She tried to pitch left to where she thought the Democratic primary electorate was at the time. Now she's moving to the center to try and appeal to moderates. So, I think the most important thing from a political perspective and from a policy perspective is that leaving aside the explanation for what changed, which is just the politics, she did cue quite clearly to the new, more moderate positions she staked out. I think that's sort of the essence of the task from a political perspective, was to say, no matter what I said way back then, right now, I'm here in the center where moderates are on issues like immigration and energy. And I think from an investor perspective, like the totality of the signals that we're seeing from her, from the Democratic National Convention, do, I think, point towards an intention to kind of govern from the center of the Democratic Party, notwithstanding some of the more liberal positions she's taken in the past.
Tobin, can we sit on policy just a little bit longer? What are the blind spots that you've got regarding Harris policy? Do you have a complete picture now of tax policy? What are the blind spots left for you?
I think we have a reasonably complete picture of what she's proposing. As always, we don't have a perfect sense of the prioritization. There's only room for so much in some fiscal policy bill next year. The exact decisions about how she's going to prioritize the child tax credit against some of her new proposals on housing, against some of these quote unquote care economy issues like paid family leave and childcare. That much is not totally clear. But realistically, even in the possible scenario that Democrats have a very, very narrow unified control of Congress, and I don't think that's what's going to happen, but it is possible, they're going to have no more than 50 votes in the Senate. And so ultimately what will get done will depend on what John Tester, senator from Montana, wants to do, more than it depends on what Harris wants to do. So I think we kind of know enough about the big elements of the Harris agenda. There are certainly some questions about how she'll handle regulatory issues, exactly where she'll land on antitrust. But this is not someone who's going to come in with a big set of majorities and a big mandate. It's someone who is going to have to govern, through a fairly challenging period next year, given that sort of DC is starting $4 trillion in the hole with the expiration of these Trump tax cuts. And I think she's just going to have to do her best to manage the trade-offs of the agenda that she's presented based on the majority she does or doesn't have in Congress.
Tobin, you said that it was really her main job to show that she was going to govern from the center, that she was going to be inclusive. She talked about including a Republican in her cabinet to try to get more perspectives around the table. We saw this just a bit with President Biden, where it was his approach to woo some of these centrists. And then in practice, he was swayed by the more left-leaning parts of the party. What's to say that it won't be the same for Kamala Harris?
It's certainly possible. You know, I think if you're an investor worrying about the effects of a Harris presidency, I think it makes more sense to worry about, you know, maybe she will end up putting, you know, really aggressive regulatory picks in at places like the FTC, despite the fact that that's not really what she's been signaling. I think that makes much more sense to worry about than stuff like this unrealized capital gains proposal, which has never come close to coming close to happening. And, you know, she's never actually said anything about it. All she's done is sort of decline to go through line by line the $5 trillion worth of taxes that Biden has previously proposed and say what she does and doesn't agree with, which I think, you know, it's not surprising, but she's not wanted to kind of open that can of worms. So, you know, that I think has gotten much more attention than it frankly deserves. So there is a possibility that she ends up, you know, left of where she is indicating on issues like antitrust. But, you know, I think the most encouraging thing probably that we've seen so far is that she does not seem to be experiencing pressure from the left. I think part of Biden's move to the left was a very intentional effort to kind of bring them into the tent. We had these Biden-Sanders unity kind of task forces in 2020 as an effort to try and heal the, you know, the wounds of these big, you know, bitter primary debates that we had between the Sanders wing and the establishment wing in both 2016 and 2020. And Harris has not, you know, been experiencing pressure from the left. She's not, you know, felt no one's sort of complaining that she isn't talking about Medicare for all. The kind of climate folks are not trying to rake her over the coals for being fairly quiet about that element of the agenda. You know, at the DNC last week, I think that was the thing that jumped out. Like the party is unified, and you know, particularly in the sense that she is not kind of bowing to pressure from the left-wing policy demanders within the party, who, for the most part, everyone is just like so excited to have a potentially winning horse to cheer for and some shot at beating Trump that they're keeping their disagreements quiet for now.
Tobin, such a good final point. Tobin Marcus there of Wolf Research. She's not bowing to pressure from the left because right now there isn't much. There isn't much pressure at all. The progressives are not forcing her into unpopular policy choices at all. Nothing like the way we saw things transpire 4 or 5 years ago.
Tobin put it perfectly. Basically, they're so excited about having a candidate who might win that they don't want to destroy it. You just wonder how long that's going to continue if she does win the election.
You asked the right question. How much daylight will there be between how she campaigns and how she might govern? And of course, a lot of that's going to come down to what the rest of Congress will look like. But ultimately, that's the question, isn't it?
Well, it is the question in terms of her trying to explain her policy shifts. If she leans into the idea of, yes, I'm a chameleon, I'm trying to represent the views of the people. And I go around and I try to get a sense of where people are at, and I try to represent it because we are of the people and for the people. That could work. I don't know. We'll see.
We got an interview. It's a good step forward. And hopefully get more steps, more conversations in the weeks to come. We need them. Equity futures right now on the S&P 500 firm up by 1/3%. Up next, cheaper prices, but more travelers. A Labor Day travel preview with Elaine Becker of TD Cowen from New York. This is Bloomberg.
I've seen firsthand how some fashion businesses make women feel. And I think there's one thing, you know, being really vocal and being an Instagram activist and talking about something, there's a difference than putting your money where your mouth is and really trying to do something about the problem. And that's what I did with that business. It was about how do I take everything that I know and I've learned and actually do the opposite. And I think that as a young black female entrepreneur, the only thing that I could do was what I know from my experience. And the honest truth is, I didn't set out to create a company that was like deeply rooted in the principles of inclusivity and diversity. I set out to make a company that was right for me and my friends, and I knew that if I had a problem, chances are somebody else does. And I think that's where so many businesses are, you know, created, when you're solving a problem that's real for you and therefore real for the consumer.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Your scores this Friday morning, and good morning, look like this. Up by 0.4% on the S&P, on the Nasdaq 100 up by 0.6, a bounce back there. The Russell was okay yesterday. Outperformance this morning up another 0.4. On the month for the S&P 500, looking for a fourth consecutive month of gains on the S&P 500. And if you switch things up and get to the bond market, we're looking at a fourth consecutive month of falling yields on a two-year yield. Lisa, 390 at the front end of the curve.
Even with a 3% GDP being penciled in for this quarter, the sense that even though growth is good, even though we are seeing ongoing stability in the labor market, this Federal Reserve is going to have every ammunition to cut rates. And the why is in what we get today at 8:30, with core PCE likely to come in at some of the lowest levels that we've seen since the start of the pandemic.
And you, Mitch, consumer sentiment as well.
Yeah, how do you feel?
A little bit later. Big time. Wasn't called again, so missed the survey again. Still waiting for that call from you, Mitch. I'd like to make that happen one day. You will know that. Let's turn to foreign exchange. Take a look at the euro. Euro dollar looks a little something like this morning. 110.83. Eurozone CPI heading in the right direction for the ECB. No negative surprises at the aggregate level. Some encouraging signs at the national level with Germany just yesterday at the regional level. Lisa, when you break it down, this ECB is set to cut interest rates next month again. Whether they cut again and again, I don't know. Isabel Schnabel, the ECB executive board member, was pretty vague about that. I think they still want to give you the impression that they're very serious about keeping inflation down to 2%. At the same time, the Federal Reserve is starting to focus on the other side of the mandate. The ECB is a single mandate central bank, so this is all they can do.
You know, last week, again, I keep going back to these discussions with Ali Ren as well as Mr. Kazaks of the ECB Governing Council. Both of them were talking about how we'll see. They were vague also, but on the opposite direction, saying that their biggest concern was weakness in the economy, not a sort of reignition of inflation. So I don't know how much signal there is to take from Isabel Schnabel. She might be trying to sort of just cast doubt in there. That said, why should the ECB cut rates less than the Federal Reserve, given the fact that they have disinflation, a 2% reading for German inflation now, which is the lowest going back to 2021, and the weakness that they're trying to prevent?
I think we've had a really good conversation so far this week about unlocking dollar weakness and what we need to see. Normalizing interest rates is a piece of that. Connected to it, rebalancing growth differentials. It's difficult to see that evolving when the numbers out of Germany are as bad as they are and the struggles out of China continue, which I guess is why we're still around 110 on euro dollar. The Chinese currency strength is interesting. Whether that can really extend from here, a big question mark around that, I think.
A lot of it really lives and dies on whether the PBOC wants to actually deploy fiscal stimulus. There was actually a surge of cash into Chinese equities from foreign investors over the past week. I find that fascinating. It's the belief that we've seen the trough with officials there really beginning to desire to step in, which is the reason why it was notable to see sort of the adjustment around possibly refinancing mortgages.
Some of those flows starting to reverse just a little bit. Under surveillance this morning, the latest Bloomberg Morning Consult poll showing Kamala Harris leading or tied with Donald Trump in each of the 7 swing states. It's particularly notable in North Carolina, where Harris has a 2-point advantage. No Democrat has won that state since Barack Obama back in 2008. Harris has the momentum.
And that's the reason why you see former President Trump really trying to be more aggressive on the other side. Did you see this whole thing about possibly backing a ban on backing sort of a repeal of this law in Florida that Trump was talking about for having abortions by 6 weeks, and he's coming out, and then he incurred the wrath of other people talking about how the government should pay for IVF treatments for people, trying to figure out how to cater to a cohort of voters who are moving away from him. I wonder what else we see on that front as we do see that momentum squarely with Harris.
Double haters. Harris is doing a better job at converting the double haters. Based on the commentary we've heard on this program, and for the former president, and we had a guest in the last 24 hours or so who talked about the limits, the ceiling of the former president's audience to attract more people. Got to try and change the tune when it comes to moderates, and I guess that's the first attempt at doing so, and maybe we'll see more.
Maybe we'll see more, or will it just be get out the vote? I mean, again, at a certain point, if you have a ceiling to your supporters, but they are diehard supporters and they're going to come to the polls, well, lean into them, right? Which is sort of what J.D. Vance was supposedly trying to do. Just a real question here about political calculus at a time where you're trying to lure in a lot of people who have felt quite disenfranchised in general from the political machine.
We'll come back to the politics a little bit later. I want to get to our report here at Bloomberg on this story. Intel working with investment bankers to navigate the most difficult period in its 56-year history. The chip maker said to be discussing a range of scenarios, including a split of its product design and manufacturing businesses. Lisa, that stock up at a pre-market, 2.6%.
I thought the story was fascinating. So Pat Gelsinger has been trying to lean into a host of different efforts, including this foundry. But part of the problem with it is that it mostly just makes chips, or it will only make chips for Intel. It isn't necessarily going to be the foundry to the world the way that they want it to be, rivaling the likes of TSMC. To me, this is sort of the existential question. Can you turn it around at a time where there are quickly moving technological advancements and the big are getting bigger and more entrenched in the business? And to see how they sort of offset some of the weakness that they've already seen will be really interesting.
I'd make 2 points. One, we spoke all day about NVIDIA yesterday, and I don't think Intel came out of my mouth once. That's a problem for Intel. Two, when you listen to analysts around this story, the word specialization is really, really big right now. NVIDIA specializes in design, TSMC specializes in fabrication. What Intel stands for, what they specialize in, isn't that what we're trying to address here?
Yeah, essentially, how do they get into the AI world with that high-tech specificity? Issue is, how do you get a lot of the talent to do it? There is a whole machine in place in Taiwan to sort of train people how to work at TSMC, how to produce the chips that really have fueled the whole AI revolution that Dan Ives was talking about yesterday. How does Intel do that in the U.S.? How does the Intel do that in other places where you don't have that same infrastructure?
See what changes we get. Their stock is up in the pre-market by 2.6%. The latest reporting from our colleagues here at Bloomberg. Let's turn to this story. You might be traveling today. Record crowds and lower prices are set to be the theme for this Labor Day travel weekend. The AAA expecting domestic travel to jump 9% from a year ago, while seeing a 2% drop in the overall cost of travel. Joining us now is Helene Becker of TD Cowen. Helene, walk us through the numbers. How busy is this long weekend going to be?
Yeah, good morning. I think we'll see about, in terms of air, 17 million-ish people will travel this weekend, which is about an 8 or 9% increase over where we were a year ago. So we're seeing nice strength. And a lot of that is in the domestic market where we're seeing lower fares, because we still have too much capacity in the airlines. While they are removing seats for the fall, late summer here, we still have quite a lot of seats available for sale. So good demand and good prices.
Walk us through consumer confidence at the moment. When we look at the data, Helene, what it tells us is that overall they still seem okay, but underneath the surface they seem less confident about finding work. When you start to move into that world, who's actually traveling in this country at the moment?
Yeah, Jonathan, so we're seeing two cohorts travel. We're starting to see a slight uptick in corporate travel, and not so much business travelers who have never really gone away. It's just the managed corporate travel that we're starting to see come back. And that came back, it stalled, it came back a little bit. We're still below where we were 5 years ago, but we are seeing that cohort come back, especially after Labor Day, as we see more people return to office more days of the week, and as we see more conferences. September to the beginning of November tends to be a big conference season, as does March to May. So we do see that cohort travel. And then the second cohort that we're seeing travel is people who are still doing bucket list trips. We're definitely seeing them on the road. And we are also seeing people who are comfortable spending money on travel and on experiences and continuing to do so versus goods. So we have seen that. The cohort that we're not really seeing travel is the heavy leisure travel, people with very young families. Those folks generally do 1, maybe 2 vacations a year. As we go into the holidays, they'll want to travel. So not so much in the fall do they travel as much as the other 2 cohorts or 3 cohorts I mentioned.
Elaine, can you just sort of square the circle for me, this idea that we're seeing a record volume likely of travelers this weekend, and yet there are still a lot of open seats and prices are down? Does this mean that a lot of airlines have just increased their capacity more generally? Does it mean that there's some disconnect here in terms of where everybody's going and it's very consolidated?
Yeah, Lisa, that's a great question. We're seeing this really interesting mix of travel because we did see too many domestic seats, but then airlines complain that they're not being able to get their capacity, their new aircraft from Boeing or Airbus. So you have the complaints and the laments that they don't have enough aircraft, but then on the other hand, they have too many seats on the planes. So yeah, we're definitely seeing, we saw a lot of capacity go into the US domestic market in the last 2 summers, but we saw the travel demand really be internationally focused, especially Europe. And this summer we saw very strong Asia travel. So those 2 markets were very strong for demand versus the domestic market, where people kind of did that in 21, 22, maybe early part of 23, and then 23 and 4 really shifted to do more international.
So why don't they just take the airplanes that are going domestic and make them international? I mean, why don't they just shift the composition of planes? Because that's what it sounds like the issue is, less than just overall capacity. Am I wrong here?
Well, no, yes and no, sort of. So every aircraft has every airplane.
You're too polite, Helene.
So the way to think about it is not every aircraft can do every mission, and not every domestic aircraft can fly internationally. You have to have overwater approval. You have to have the range capability. So yeah, they can't necessarily just mix and match that way. Some aircraft just don't have the range to do transatlantic or transpacific. So they would need to have a wide body aircraft like a 787 versus a let's say an A320 current engine, a CEO versus an NEO. So yeah, you're not going to be able to do that, but it's a great thought.
Elaine, before you go, I'd love your thought on why Alaska and Hawaii can get together, but JetBlue and Spirit can't. Why is that the case?
Yeah, Jonathan, that's a fair question. So here's the thing. For JetBlue and for Spirit, you were actually seeing a completely different merger. You were seeing JetBlue was going to absorb Spirit into its network. It was going to reconfigure the aircraft. The aircraft had more seats. The Spirit aircraft had more seats than the JetBlue aircraft had. So you were looking at, on some aircraft, 180 seats-ish going to 162-ish seats, or 220 going to 180, depending on the aircraft type. So you were taking seats out, and the concern, I think, among Justice and Transport were that they were going to raise fares and remove an ultra-low-cost competitor from the market that appeals to a certain cohort of traveler, and that's the one looking for deep discounted tickets. The look for Alaska and Hawaiian is completely different. You don't have a lot of overlapping routes. There are only 3 where you go from 2 competitors to 1. Alaska has said they were going to keep the Hawaiian brand, which is iconic, right? Leilani is on the tail of the Hawaiian aircraft, and the Eskimo is on the tail of the Alaska aircraft. So they're not going to absorb Hawaiian into Alaska. They'll continue to operate 2 separate brands. Hawaiian's balance sheet's a little bit stretched. They just borrowed money at 11%, which is in this market very high. And so you have to think about what that's going to do to their not only the balance sheet, but also in terms of interest expense. You're going from, I think they replaced debt that was 2 or 3% with 11% debt. So you have a huge jump, which puts pressure on pre-tax margins. And nobody wants to lose the Hawaiian brand. It's, like I said, it's an iconic brand. And it offers a great product. It's a great management team. So that merger is just looked at differently than the JetBlue Spirit one was.
Elaine, appreciate your time this morning. Thank you. Travel safely this weekend. Elaine Becker there of TD Cowen. Great customer service on Alaska. You ever flown Alaska?
I have, actually.
Fantastic customer service.
I just loved actually being in the Alaska airport and watching all the cargo ships, because all the cargo planes come in to Alaska as a refueling spot, and they come to get all the fish, all the salmon, and then they fly it out frozen on these huge cargos.
Is that what you flew in for? Bit of plane spotting? That what you're into?
Yeah, definitely.
Vacations?
Yeah, it's fun.
Equity futures right now on the S&P up around 1/3%. Let's get you an update on stories elsewhere this morning. Nothing wrong with that if that's what you're into. Here's your blooming brief. UK home prices dipping unexpectedly in August. Data showing a 0.2% decline in prices versus estimates calling for a 0.2% increase. The average cost of a home was just over 265,000 sterling, up 2.4% from a year earlier. That's 3% below the all-time high reached last summer. Chinese automakers are feeling the pinch in Europe as new tariffs take effect. Top electric vehicle brands, including SAIC and BYD, seeing a 0.3% drop in market share from a year ago. The tariffs launched in July, raising duties on Chinese-made EVs to as high as 48%. And finally, Lululemon trimming its sales and profit outlook for the year as inflation and increased competition curb demand. Comparable US store sales falling 3% in the second quarter, missing analyst expectations. Shares actually rising in the pre-market after the initial drop. We're up by 3.9%. Apparently baggy pants are the issue here. Bramo, did you see that?
Yes, I did see that. The fact that essentially people are done with the tight, and Lulu is all tight, and they want more kind of, you know, the loose, the aloe, right? The aloe yoga, like Beyond Yoga, those types of things.
If you go on the Lulu website, though, and you click on the range, the top line, it's all loose pants. So they make them. I just assume people don't want them.
I think that they're trying to revive their impressions. There also was issues with some of the fabrics. That's been a long-standing issue that comes and goes, issues with the fabrics.
What's the issue with the fabric?
That it wasn't as high quality, and people were complaining as they were going to other places, and they're saying that they're going to turn that around, and that's the reason why stocks are rising.
Dana Telsey with us a little bit later to talk about the fabric and pant fit and all of that. Up next, 25 or 50.
Given the current conditions that we're looking at today, I think the Federal Reserve is going to err on the side of caution and go with 25 basis points at the next few meetings. That's going to be very important. The Fed essentially showing willingness to lean against that labor market risk.
It took me a while to go with pants and not trousers, you know.
Really?
Yeah, because in the UK we don't call them pants. Pants are underwear.
What? Why did you switch then?
Lived in America a long time.
Yeah? See,
people won't understand me. So you adapt and adjust.
Okay, hold on a second. You adapt and adjust.
You adapt and
like
adjust.
American companies. But there's this question of when you go back, do you say pants and do everyone look at you?
You integrate into society the best way you can. And that's what I do. I'm integrating, all right?
Good to know.
More on the Federal Reserve. Up next, from New York, this is Bloomberg.
About artificial intelligence. Is artificial intelligence going to enable you and others to say, we have enough information to know exactly what something is going to be worth in terms of insuring it or not?
Artificial intelligence is finding its way into our business in a variety of different factors. I think the first piece is getting much better insight into data, which allows us to make better decisions on underwriting. It's also a great opportunity to service business better in terms of like call centers and different ways of what's using robotics and other AI will be very helpful. But it is an emerging practice within the industry and one that is evolving very quickly. So it's also going to present risks that other companies, how they use it and how they use large language models and making sure the decision making is very sound. So it's complicated, but it definitely is benefiting the business today.
It's It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
DOJ or other authorities
could face bigger challenges next.
It was going to keep reading World Cup. This is a three.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
Taking abuse in a commercial break for the word blooming.
Oh, yeah.
Yeah.
Well, you know.
It's pretty old school.
Oh,
It's pretty old school.
it's bloomin' awesome. You should use it more often.
Thank you. All right. It was an accident. Forgive me. Under surveillance this morning, 25 or 50.
Given the current conditions that we're looking at today, I think the Federal Reserve is going to err on the side of caution and go with 25 basis points at the next few meetings. The Fed has been, lucky enough to have that combination of resilience closer to the 2% target without inflicting too much pain to the labor market. That's going to be very important. The Fed essentially showing willingness to lean against that labor market risk.
Here's the latest, a little under 2 hours away from a fresh read on the US economy with core PCE and personal income and spending data due at 8:30 Eastern Time. Claudia Sam of New Century Advisors writing, none of our output metrics point to a growth scare, and none argue against the Fed rate cut either. With the expansion of the labor supply and higher productivity growth, recent growth has not shown signs of an overheating economy. The soft landing remains the base case. A good friend of this program, good friend of ours, Claudia joins us now for more. Claudia, welcome back to the program. We started this morning and this hour with this quote, and I wanted to share it with you. It came from the Dollar General CEO on low-income shoppers. Inflation has continued to negatively impact these households, with more than 60% claiming they have had to sacrifice on purchasing basic necessities. It's difficult to really get a complete read of what's happening with the consumer right now, Claudia. If you're asked, and I'll ask you, how would you characterize the overall situation for consumption and the consumer in America?
Right, so I think this is what is always difficult with U.S. consumers. We have a population that has very different income and wealth and needs, and it absolutely makes sense that right now we are years into inflation that has been higher than normal, and it's going to hit people at the bottom hardest. So that's why it's so important, in particular, to keep the expansion going, to get the labor market, have the hiring rates, the jobs there. These are the consumers that absolutely depend on their paychecks to make things work. So overall, the picture is good, but that does not mean that it's good enough, and it doesn't mean that it stays that way, particularly for certain groups that are under stress like that.
I know that's why, one of the reasons why you were happy with the shift from Chairman Powell in the speech just last week. A question we've explored through this week is how much daylight there might be between him and other members of the committee. Do you see this whole committee moving in the same direction, or are you starting to see some division, some splits, some cracks?
It's important for there to be differences of opinion and a robust debate among the committee. We should be most worried when they're all singing the same song, right? Like, this is a really complicated question. Are we moving in the direction that Chair Powell laid out? Absolutely. And I think you can even see that in the minutes from the last meeting before we got the July employment data that was so disconcerting. So I think that's where we're headed. I expect we'll continue to get good news on inflation. That's important. That's why interest rates are high, is to help get inflation down. We're making a lot of progress there, which means that can really pay attention to the slowing in the labor market. And with maximum employment, what you want is the most employment possible without creating inflation. If we are making progress on the inflation check, they can ease up some on the interest rates, and they should ease up some on the interest rates so that the labor market can kind of get its footing back and bring some more of these workers back online.
Claudia, you say get its footing back. Where do we have a sense that the labor market is losing its footing?
I think at this point, when you see the job gains have slowed, really most worrisome is the fact that the hiring rate So for people who are coming into the labor force, whether that's coming out of schooling in their first job or we have a larger immigrant workforce at this point, like it is harder for them to find jobs. And there's a real disconnect between, what the hiring rates look like, which are much lower than just, a couple years ago. And frankly, go back to kind of 2014, 2015, that wasn't a great labor market. So we need people coming in to bring their talents. And it's not just about the fact that, yes, layoff rates are at all-time lows. That is excellent. Let's get hiring rates up to all-time highs again. So I think we've got some disconnect in terms of who is really getting hit in terms of, opportunities. And we just, kind of even it out. We're still coming out of an adjustment, and there's no reason for further cooling in the labor market. We don't need it to get inflation down. And it's a real loss in terms of our, what we can do as an economy if we have people on the sidelines.
Claudia, you created the rule that so many people have been citing over the past few months from the Fed and beyond, the SOM rule, which talks about a 0.5 percentage point increase in the unemployment rate over a 6-month period of time. We have seen that. What would give you much more pause in this upcoming report that we get next Friday, that maybe this is really, truly a much more quickly deteriorating labor market than we otherwise had thought?
Right, it's true. One's got to take big picture view. A lot of the information we've gotten outside of the labor market looks pretty solid, right? So there's no one report that's going to be game changing in terms of how we think. Clearly, we're looking for the unemployment rate to maybe come back a little bit. Some of that was a temporary layoffs, that a blip in it. We want to see the payroll numbers stabilize. Things that look worse, or we don't unwind some of July, is going to give pause. But really, it's watching this. We're looking at trends. We're looking at contours. There's no magic number here with the SOM rule to try to get a sense of it really is about the direction. And we should expect to see over the next several months probably still some more softening in the labor market. Just because Chair Powell or the Fed gets going doesn't mean everything changes on a dime, right? Like, we really do have to see policy change and then, understand better how things are evolving in the labor market. And the confidence of businesses to hire is an important piece of it as well.
Claudia, we're always lucky to catch up with you. Thanks for your time this morning. Claudia Sahm of New Century Advisors on the labor market, on the consumer. Pertinent given what's coming up next week. September 6th, the payrolls report. 24 estimates are in our survey at the moment. Could change, more will come. The median right now, 160,000. The previous number, Lisa, 114.
And what will these numbers mean to this market? Some people are saying it might actually matter more what the unemployment rate is than even the headline number, just simply because of exactly what Claudia was just talking about. Those adjustments, how do they fit in?
Big jobs report just around the corner. A preview coming up in the next hour. We'll catch up with Ed Yardeni of Yardeni Research, Mayor McGuinness of the Committee for a Responsible Federal Budget, which always makes me laugh because we don't really have one. Jonathan Miller of Miller Samuel and Jeremy Stretch of CIBC. All of that and more still to come.
Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
What prompted you to want to get out of just doing surgery to be an administrator and a hospital leader?
Watching others who did it well. I had a dean who recruited me from Birmingham, Alabama to Minneapolis, Minnesota, which is a big jump to convince me to move my family. I realized over time that my training as a surgeon brought a set of credible things to the table. One, if surgeons have a measure of emotional intelligence, not much of our training reinforces that. It reinforces skill, not necessarily emotional intelligence. But if a surgeon has some self-awareness and emotional intelligence, what they bring to the table of leadership are three fundamental things. Number one, they do everything in teams. Their operations, their patients they see is all team focused. Number two, they value process, but they hold themselves very much accountable to execution. They understand that it's good to explore a patient, but what really matters is that you take the tumor out. And then number three, they make difficult decisions on incomplete information. Those things I realized that I could bring to the table as a leader if I had a sort of a passion for working with people and had some sense of self-awareness.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything. Is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
There's been a deterioration in the labor market in the U.S.
Should we see further weakening, the Fed will be likely to step in.
That's going to be very important. The Fed essentially showing willingness to lean against that labor market risk.
Well, I think what the FOMC is going to have to do is just wait to see what happens.
Indicators are pointing to slowdown, but the market's less concerned about that, and the market's focusing on rate cuts right now. The Fed has to deliver.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowitz, and Anne-Marie Hordern.
This is Bloomberg Surveillance, and the second hour begins right now, live from New York City this morning. Good morning for our audience worldwide, getting you to the weekend with a positive equity market, for now at least. Let's start with the scores. Equity futures on the S&P 500 up 0.5%. On the Nasdaq 100 up by 0.8 in yesterday's session. The small caps outperforming on the back of better than expected economic data. Jobless claims largely in line, GDP better than expected. On the Russell, we advanced by 0.5% on the session. So that's stocks, on the S&P at least, poised for a fourth monthly advance, closing out August with a gain of a couple of percentage points. In the bond market, let's switch at the board and get to a 2-year, 10-year and 30-year. The 2-year at about 390.21, the 10-year 385.76. On the month, as equities go towards a fourth month of gains, 2-year yields go towards, Lisa, a fourth consecutive month of declines. And we said a little bit earlier this morning, bonds and stocks speaking to each other, the prospect of lower rates.
And the prospect of lower rates ahead of a downturn rather than in response to a downturn. And this is essentially what Jay Powell heralded during the call that he had in Jackson Hole, a question around whether he was trying to say mission accomplished at a time when we still have not yet seen the full ramifications of just how far a potential weakening in the labor market could actually go.
He came really, really close to saying mission accomplished. He used the word my confidence. And we've heard from several Fed officials since we heard from Chairman Powell this time last week. There appears to be a little bit of daylight between the Fed chair and the rest of the committee. We've still got some more data to come. September 6th, we've got the payrolls report. We can talk more about that. September 11th, we've got CPI, which we've hardly discussed. Maybe there's something to be seen there. September 18th is the Federal Reserve meeting. So we've got a few more weeks of economic data to try and get that committee on the same page.
Yeah, although the data has been so confusing. And I wonder, actually, what you think about this. I was thinking about this last night. I'm actually less interested to hear from Fed officials right now. I'm more interested to hear from CEOs of what they're seeing on the ground, because that's just as contradictory as some of the data that we're getting elsewhere. And frankly, I'm having a hard time reconciling both this enthusiasm that the Fed can cut rates as aggressively as they can while also betting on the recovery that's going to engender before the downturn that ever happens, which is essentially the rotation that we're getting in the equity markets. I just wonder how consistent these two ideas are at a time where there is a lot of contradictory data, both from the headline numbers as well as by companies.
There are certain words, when said too often, starts to make me nervous. And that word is idiosyncratic. When I start to hear the word idiosyncratic too many times, typically we'd associate that with EM. If you say enough about too many different things, you've got a much, much bigger, broader problem. And when you start to think about consumer-facing companies over the last quarter, let's go with Home Depot, Lowe's. You can make the argument that that's idiosyncratic. That's the housing market. They're being held back. You can make the same argument when it comes to things like Lululemon, idiosyncratic, right? You can pick out consumer company after consumer company and make the argument that it is idiosyncratic. But if enough companies are revising down their outlook for growth, Lisa, don't we have a problem when it comes to things like hiring, when it comes to things like firing for the months and quarters ahead?
Yeah, I completely agree with you. I mean, we were talking earlier with Dollar General. I'm sure we'll get there in a second. We also saw Big Lots reportedly considering talking about a bankruptcy or filing for bankruptcy yesterday with the downturn that they're seeing in consumers. My issue is, at this point, when you take a look at some of the motley numbers from companies, are we looking at something that's overall, or is the confusion that we've seen from the post-pandemic cycles, the sort of economic cycles that have been specific to different companies, does that muddy the waters even more? I mean, it just is it's a hard thing to really reconcile.
The same is true of the economic data. The economic data of the aggregate has been misleading. Vacation has been extreme now for a number of years, through the pandemic and out the other side. And the Dollar General quote that we've been quoting over the last 24 hours speaks to that. Look, this is not LVMH. To state the obvious, we're talking about catering to low-income shoppers. And words like this are pretty concerning both for the government and the central bank alike. When you hear from the Dollar General CEO, and he says things like, inflation has continued to negatively impact these households, more than 60% of those households are claiming they have had to sacrifice on purchasing basic necessities. TK's really good about this. He'll talk about most of the country, half of the country being flat on its back. It's being loose with the numbers there, but that's what he's speaking to, a large proportion of society really struggling to get by day to day, week to week, month to month.
And the specificity in the Dollar General reports talking about how their consumers are running out of money at the end of every month. This question about credit, right, and the availability of credit to lower income consumers. This goes to the rate picture, but also this question of the overall expenses are going up. That's why housing has become such a big issue and maybe less idiosyncratic than it otherwise would be, considering the effect on the customers of the likes of Dollar General.
Big conversation about housing a little bit later. I want to go through the day ahead. Still got some work to do before we get into the long weekend stateside. The day ahead looks a little something like this. 8:30 Eastern time, we get some data for you. We'll get personal income and spending data. Mike McKee will drop by the studio and break that down for you. A read on core PCE at 8:30 Eastern as well. A little bit later, Mitch, consumer sentiment data too. I think consumer confidence is really interesting right now because earlier this week, we had consumer confidence which said things are okay. Then you've got all these individual subcomponents. And when they start to talk about the labor market, when the consumers start to say, we're not as confident about finding a job, that's when the cracks start to appear. And I think this is really important going into payrolls next Friday. Payrolls next Friday, for those of you interested, I've gone through the numbers a few times. The median estimate in our survey is 160. That's up from 114. The expectation is that unemployment actually drops from 4.3 to 4.2. And what happens here really sets the stage for the debate about whether the Federal Reserve has to go 25 or 50 or would indeed go 25 or 50 next month.
And to be very clear, this is especially important because we have seen the University of Michigan sentiment survey sway the Federal Reserve in the past. Remember when inflation expectations went up significantly in this survey, that was what actually was the catalyst for the Federal Reserve. I'll add to that, the Fed Chair Jay Powell talked about victory not over inflation, but over inflation expectations, and started talking about how that has not become unmoored. He sees control there, no runaway inflation in the expectations. This is a direct point to the University of Michigan sentiment survey, which includes those inflation estimates that I know that you want to be called on.
I'd love the call.
I think that you should, which I'm sure that you would skew the statistics quite considerably.
I'd at least try.
Which is the reason why they're never going to call Jonathan Ferro. But to me, this really highlights sort of the intersection right now between what the Fed's trying to do and what they can do. They can affect market conditions. They can affect consumer expectations for inflation. How much can they actually change the economy on a dime right now? Not that much. And the market's already priced in a lot of these cuts.
You mentioned a few times contradictory signals. I remember something you said maybe 12 months ago. that when the data starts to contradict, it could mean we're at a turning point. I think that was building on a conversation you'd had with the San Francisco Fed President Mary Daly. That's what it feels like right now. And the division you see on Wall Street, let me just give you a snapshot of the division on Wall Street right now. The difference of opinion based on a spread of 60,000 on payrolls. The difference of opinion, 60,000, and yet the views are polarized. Citi and Andrew Hollenhorst are looking for 125 on payrolls next month, yet they're looking for a 50 basis point cut off the back of this. The multi-month rise in the unemployment rate is not a weather-related distortion or the consequence of surging labor supply. It reflects a slowdown in hiring, which will likely continue and eventually worsen into outright layoffs. Morgan Stanley's looking for 185 on next month's payrolls report. So the payrolls report we get on September 6th next week for the month of August. And they've got a completely different view on the weather. In the weakness of the July jobs report, some was weather, some was noise, and some was the slowing trend. We expect a partial reversal in August payrolls, look for 185, and the unemployment rate to drop back to 4.2%. We're all looking at the same data. We have very similar views. I've got to say, 185 to me is similar to 125, given the revisions we've just seen over the last 12 months, yet they have radically different opinions on what the Fed will deliver next month, 25 versus 50.
And part of what's underpinning that is the trajectory of where these numbers are going. We've heard from Andrew Hollenhorst over at Citigroup. He does believe that this is an economy that's declining quite considerably. Morgan Stanley very much in the soft landing camp. This comes at a time, though, and I really want to point this out. You're hearing from Dollar General, but you're also getting annualized GDP that yesterday was revised to up about 3% from the previous 2.8%. You're hearing from companies saying that their profit margins are expanding. This isn't typically a time where they will start cutting jobs in a more significant way. It is that contradictory data that Mary Daly was talking about that always happens at turning points, but it has been so contradictory for so long. And this is the reason why I think people are kind of feeling frustrated almost. Give us a signal of where it's headed, because it's very hard to get that right now.
If you are just joining us, welcome to the program. Let me give you a snapshot of price action right now. Equity futures positive by 0.4%. We talked a little bit about the bond market going towards 4 months of declining yields. On a 10-year at least, we're at 385.57. At the front end of the curve, on the 2-year, we're at 390. I want to sit on foreign exchange just for a moment at 110.83. The dollar index having one of its worst months of the year so far. But over the last week, actually the first week of strength since mid-July, we've had a string of dollar weakness, weekly dollar weakness, about to get a weaker strength.
And this came after weaker than expected jobs data, right? So that some of what we saw that really triggered the expectations for 100 basis points of rate cuts this year by the Federal Reserve. It was just added to by a Fed Chair Jay Powell, where the reaction function will be to cut rates pretty much for any reason next month, and then to continue it with a rate cutting path. But then it's been reality checked by what's going on in the rest of the world, in particular over in Europe. And I've got to say, today's inflation reads were very interesting to me. The idea that German inflation came in at 2%, that was below almost all estimates, down from 2.6% in July, and the lowest since 2021. What is the argument? I keep going back to this. What is the argument for the ECB not to cut rates more significantly than the Federal Reserve heading into year-end, considering the weakness in that region as well?
Can we unlock more dollar weakness? This is a big theme. Stephen Jen, I think, with the quote of the week regarding the FX market, believing that a lot of money has come from China into the United States to grab income, build up yield where you can't get some elsewhere. And ultimately, we're going to unwind that. And it's all going to go back into China. All that money's going to go back into Japan. We unlock all of this dollar weakness, and we could see some yuan strength of as much as 10%. There are some really, really punchy calls out there. I think we have to park this conversation about the yen carry trade and just make it really simple. Over the last year, America has been a destination to pick up risk-free yield like you can't anywhere else on the planet. That's where a lot of money's been going.
That said, that was Stephen Jen talking about this and the sort of dollar hoarding that's going to get unwound. Goldman Sachs punched back this morning, and they came out and they said, our gauge suggests much smaller dollar hoarding by exporters from mid-2022 to 2024, talking about external factors driving the yuan appreciation against the dollar, basically saying, we don't see the dollar weakness that you're calling for. This has been the ongoing debate, and it will continue to be going into year-end.
Let's get you set up for the next hour or so. Here's the lineup for you. Coming up on the program, Maya McGuinness of the Committee for a Responsible Federal Budget. Following Kamala Harris's first sit-down interview, we'll speak to Jonathan Miller of Miller Samuel on the Vice President's plans for the housing market, and we'll catch up with Jeremy Stretch of CIBC to build on the conversation we're having here on the FX market. Let's give an update on stories elsewhere this morning. Here's your Bloomberg brief. Inflation in France easing to its lowest level in over 3 years, bolstering the case for additional rate cuts from the ECB. Consumer prices rose 2.2% from a year earlier in the month of August, just above estimates, the data coming less than 2 weeks before policymakers gather in Frankfurt for the central bank's September meeting. Elsewhere, shares of Ulta falling in the pre-market, the retail chain reporting earnings that missed analyst expectations and cutting its fiscal 2024 revenue guidance. Ulta CEO saying the beauty category remains resilient, but growth is normalizing after 3 years of gains. The stock is down by more than 8%. And your third and final story, the world's third busiest airport is in line for a major upgrade. The owner of Amsterdam's international airport is set to invest over $6 billion over the next 5 years. Those funds going to infrastructure upgrades to areas including baggage, escalators, and taxiways. I think we need to see some big upgrades stateside as well in the New York region.
Well, we have seen, though, honestly, I'm going to say something very controversial right now. LaGuardia is better than the Amsterdam airport.
Ooh.
It's
Why
true.
is that controversial?
Well,
LaGuardia's had a big upgrade. It's great.
Yeah. Have you been to the Amsterdam airport?
Not for years.
Yeah, it's needing.
I've got a connection at Amsterdam airport before, and let's just say I had to run for it.
Yeah.
Like as fast as I could.
So you didn't actually have time to look around, which is probably better.
You had some problems at Amsterdam.
Well, it just...
Do you want to do European airport complaints? Because I've got many. Frankfurt. Yes. Frankfurt. My European airport complaint, Frankfurt. I once delayed at Frankfurt airport for hours. Anyone who's been there, there's nothing to do. Literally nothing to do. So I tweet, delayed at Frankfurt airport. The airport tweeted back, I hope you enjoyed it.
The delay?
The airport.
Well, maybe you can...
Hope you enjoyed the airport. I was literally being trolled by the airport. They know there's nothing to do there.
We could talk about that all.
Haven't been bad. Up next, heavy on talk, light on specifics.
My agenda includes what we need to do to bring down the price of groceries. I will not ban fracking. I think it would be to the benefit of the American public to have a member of my cabinet who was a Republican.
More on that suggestion in just a moment. From New York City this morning, good morning. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close.
Welcome to Balance of Power.
This is Bloomberg.
Morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close.
Welcome to Balance of Power.
This is Bloomberg.
Stocks on the S&P 500 look a little something like this, up by 0.4% in the bond market, the 10-year 385.38. Bit of a snooze in the FX market, euro-dollar 110.80. Under surveillance this morning, heavy on talk, light on specifics.
My agenda includes what we need to do to bring down the price of groceries, what we need to do to extend the child tax credit to help young families, what we need to do to bring down the cost of housing. As Vice President, I did not ban fracking. As President, I will not ban fracking. I think it would be to the benefit of the American public to have a member of my cabinet who was a Republican. This war must end, in the meantime, and we must get a deal that is about getting the hostages out.
The Vice President Kamala Harris sitting down for her first substantial interview since accepting the Democratic presidential nomination. This is a new Bloomberg Morning Consult poll shows Harris maintaining her momentum post-DNC, including in critical swing states. Maya McGuinness, with the Committee for a Responsible Federal Budget, joins us now for more. Maya, welcome back to the program. Always appreciate your time. It's always a frustrating conversation for us both because ultimately we both know what's going to happen here. They get into power, they'll do nothing about it. I just wonder from your perspective what the best outcome actually is. Is it a divided government which stops it from getting any worse? Or are we actually still hopeful we get a commitment in Washington, some unity, and they do something about it?
Well, the overall fiscal situation so demands action, but no matter who is president, 2025 is going to be a very challenging year because we have huge expiring tax cuts, which both candidates have talked about extending, and a debt ceiling possible showdown again. So on one hand, divided government often is sort of the best thing for fiscal issues. You can't put in place lots of new promises. On the other hand, right now, we really need to have a debt deal, to actually put in place some changes that would make a difference. The single best thing that could happen for that is that we started talking about it in the campaign, that the candidates felt like they did back in the old Ross Perot days, that they had to talk about this issue and what they would actually do to improve it, and started competing on that front. That would create more of a mandate for whoever is in power. But I'll tell you, we're off to a rocky start where both candidates have so many promises that would make the fiscal situation worse. Very light on details on those that would make it better.
Maya, the only thing that would really cause this to be front and center for the campaigns would be if the bond market actually pushed back and created a market problem that really forced the hands of the candidates. Are you frustrated that that's not happening?
I mean, do I want there to be any kind of a crisis that causes action? No. What I'm really frustrated is that our government only does anything when there is a crisis and an action-forcing moment. I would like, as I think most of us would, to have a functioning government that got ahead of these problems. But it does concern me, to your point, that I think the financial markets will be the only things that really push action. And there's a very different time horizon where traders, those who are looking at the bond market and acting there, it's a very short-term time horizon, and it's almost somewhat of a bubble mentality, which if you worried about this for too long and nothing happened, you made some mistakes in terms of how you're investing. We don't know the timing of when rates will go back up, but we know that you can't go on this fiscal trajectory as we have indefinitely without upward pressure on inflation like we just saw recently, more upward pressure on interest rates, and this high debt load that we have means that the cost of when those rates do go up will be incredibly expensive. Right now, just a 1% higher interest rate than is anticipated leads to roughly $300 billion a year in higher interest payments. So we are very dependent on those rates, and any change there would push politicians to act. I'm not always sure they'd act in the right direction, though. They might still compete about doing the wrong thing because our policy solutions are so off the mark right now.
Before we get into the candidates and what the proposals would mean, I am curious about your view on how the Treasury Department has gone about issuing debt to fund this deficit. There has been some criticism that they have disproportionately issued debt on the front end of the yield curve in order to insulate the long end from any type of volatility. Do you see that as potentially sort of keeping a lid on how much borrowing costs could go up, and thus how much a market really does challenge this fiscal policy?
That certainly could. There is a risk that that's been the situation. For quite some time, people have been questioning the different ways that treasuries have been auctioned and why, for instance, we didn't have longer maturities. A number of years ago, people were talking about issuing, even 100-year bonds. There just wasn't the demand for that. Treasury has always had a very in-depth process of looking at liquidity, maturity, the different trade-offs in the market. But there is always a risk that it becomes more political, those choices that are being made. That said, I haven't seen any specific signs that there's motivations there. And it's the same that there's always accusations that the Fed is doing anything politically, which I think is clearly not the case. So my biggest worry isn't there. My biggest worry is we have two teams in Congress and the president of both parties who really thinks the best way to win the hearts and minds of people is giving them things, tax cuts and spending increases. They keep doing that, and that does put pressure on those who are, managing the stability of the markets, both in fiscal policy and monetary policy, to be sure.
Maya, which candidate right now has a higher debt load that they're basically implying through what they are promising to prospective voters?
Well, I should be really clear. It is absolutely premature to talk about how much both of them would add to the debt in any comprehensive way. And we will, in a month or two, issue a very detailed, comprehensive score of both the candidates' plans as part of our U.S. Budget Watch project. But we're at that point where both candidates have kind of flirted with some ideas, but not committed to them. So you can't put out a real score yet. But if you're looking, former President Trump would add trillions, plural, probably 3, 4, 5 trillion to the debt from his promises so far. And Harris would put closer to 1 trillion. So far, the promises of Trump are larger. A big question when it comes to former President Trump plans is how much money all those tariffs would raise. You have to look at the tariffs. There's a lot of revenue that would come in there, but it would have huge effects on the economy. And a big question when it comes to Vice President Harris is she has promised to extend the tax cuts, but we don't know what that would look like. She has promised to adopt the tax increases in the Biden budget, but we don't know what that would look like. There are trillions of dollars there that haven't been laid out. So the running price tag for both of them, probably roughly 4 trillion for Trump, 1 trillion for Harris, is not at all them having got to the finish line. If I were betting, I'm worried that those numbers will get larger, not smaller, once the campaign moves into the final season.
Mike, just got about 60 seconds. What is your thoughts on this? Taxing unrealized gains. We've heard directly from the campaign about this, but not directly from the candidate with any real clarity. What's your read on what that policy might look like and whether they can actually follow through with it?
I think we won't get the details of that policy because it's incredibly complex, and the closer that you move to enacting it, the more problems start to surface. So I think these will be things that are talked about in generalities in terms of what groups of people want to tax at higher levels. They're going to stay away from specifics because it gets very tricky when you start to talk about how to implement taxing unrealized gains, for sure.
Maya, when you put out that report, come here first. Looking forward to catching up about it. Thank you. Thank you. Maya McGuinness there of the Committee for a Responsible Federal Budget. The key word, responsible, sort of missing from the conversation.
Well, essentially, as she said, the way people win elections is by promising everyone more. And that's basically what we see in these elections as well. And the question is whether the hand of those politicians will be forced by a market that has been becalmed, frankly, by past history and by the fact that the U.S. is in a unique position.
The privilege of acting recklessly. A privilege other countries don't have.
Some people say that.
Some people do say that. some people around this table. Coming up on the programme, Jonathan Miller of Miller Samuel as pending home sales fall to the lowest level in over 20 years. That's next.